We're speaking with Art Collins, Chief Operating Officer of the Minneapolis-based Medtronic. Mr. Collins, welcome to the Dow Jones Investor Network.
Thank you, Leslie.
Well, let's just jump right in. We're here at the Hamburg & Quist conference, and let's talk some about the cardiac pacing business. We'll start with that, and in particular, the ICD component of that business, since that's been getting a lot of press attention lately. Guidant and Reprts recently received FDA approval for their new versions of their defibrillators. Now, Medtronic clearly has the lead market share with its implantable Joule defibrillator. However, a lot of analysts and market folks are now looking at this arena and wondering how everything is going to play itself out, given the competition coming into the market. So why not start by talking some about how you see the landscape shaking out?
Good. Well, first of all, I think that the position that we currently have in the implantable ICD market is probably one of the greatest success stories that Medtronic has had. When we introduced the Joule, we made probably the greatest increase in market share in the United States of any medical device company. Going back in history, there were several requirements that the implantable ICD needed to have. First was to get biphasic, and before we had that, we were at a disadvantage. Once we got that, the next major requirement was to be able to implant in the pectoral region. And in addition, the very important component of giving both the patient and the physician flexibility to get in and out of the procedure quickly was enhanced by our active can version, which was just approved in December. So we've seen market share increase rapidly, and we would continue to expect, even with the introduction of the Cadet and the Mini, to maintain the leadership position. And that's a function of a whole different set of considerations that the implanting physician and the administrator has. Size is one, but there are many others.
Now, while Guidant has FDA approval to market its device for pectoral implantation, Reprts doesn't yet have that particular approval. There seemed to be some sort of situation, I guess is the best way to describe it, that transpired around that in pectoral labeling for these products. Medtronic was kind of painted as the bad guy a little bit in the press, I think, because it was perceived that Medtronic was trying to throw a monkey wrench into the process so that Reprts would have a little bit harder time of getting this approval because of perhaps fears on the part of Medtronic of this competition. I'd like to give you a chance to just respond to what's been out there in the press in the last couple of months.
Sure. Medtronic didn't try to throw any monkey wrenches into anyone's approval. What we have been in discussion with the FDA concerning is what are the current policies regarding labeling and clinical trials. The FDA made it very clear to us that irrespective of what the labeling claim stated, the intended use for the product should dictate the type of clinicals that were provided. Medtronic has, over the years, always submitted clinical data conforming to what the intended use of the product would be. So in other words, when we had a product that would be implanted in the pectoral region, we submitted clinical data on pectoral implants. So our intent in discussions with the agency was not to affect any competitor, but just to understand what the rules of the game were and to ensure that those were equally applied.
As we go forward, are these products likely to become commodity-like and therefore will pricing be under pressure? Or do you expect to have added functionality that will differentiate your products from the others?
Oh, I think we'll continue to see the technology evolve, and I don't see these products moving into a commodity category anytime in the foreseeable future. I've alluded to the ICD market almost as a baseball game, and we're in the early innings. We have a long product pipeline, and we're investing significantly to continue to improve the product, its functionality, its ease of implant, its longevity, and I think as we view not only the Joule but its subsequent models, we look at this in a broader context with the whole pacing area, including our bradycardia pacemaker line. And so many of the investments that we are putting in place in the actual generator technology are complemented by improvements we're putting in place in the lead that goes with the generator, and the programming capability, and obviously the very large technical support group and manufacturing capability that once you have a product allows you to meet customer demand.
Over the next, say, 12 to 18 months, what are we likely to see from this entire cardiac pacing arena from Medtronic in terms of new products you would expect?
We are waiting for our model 7220 active can to come out that has been submitted to the agency, and we would expect that approval in the not too distant future. We have the microjoule, the 7221, that will be going into clinicals, and we hope to have that product approved as we head into the fall of this year. We have another product which we have not talked about the clinical protocols or the timing, called the 7223, and we have additional improvements that are further back in R&D. So I think you can continue to look forward from Medtronic to a series of improvements across the implantable ICD line that will not only improve, as I indicated before, the size, the weight, the functionality, the lead capabilities, the longevity of the product, the stored information that will allow a physician to understand what has happened prior to an episode, as well as continued expansion of our programming capability that puts together this in the context of a system as opposed to an individual product.
What about the area of atrial defibrillation? Could you talk some about that?
Sure. It's a very prevalent condition. We have been studying it for some period of time. Unlike some companies, we are taking a multifaceted approach because very candidly we're not sure exactly where the technology will lead and what will be the preferred option. We are currently involved with our pacemaker and our cardiorhythm ablation product in supporting research in an area called ablate and pace, where you ablate the AV node and then use the pacemaker to take care of the ventricular function. We're looking at broader-based ablation that would be curative in nature. We are looking at pacing by itself to help pace out of atrial fib, and we are looking at options that would use a defibrillation approach. So Medtronic has a number of different options underway with a lot of research going, and we may find that there is not one single answer. There's a lot of people that suffer from atrial fib and different levels of severity, and so I think not only will the mode of therapy be important, but the ability to diagnose and segment patients into different groups will also be important.
In Control has its metrics atrial defibrillator. I know St. Jude has a stake in them, but I don't know whether that would prevent them from talking to anybody else about teaming up in some way. Would Medtronic be interested in looking to a company like that or any other, perhaps, that might be developing something along these lines?
Well, we have internal programs that are underway, as I indicated, in a broad range of options for atrial fibrillation. We also, in a general statement, prefer when we have the technology inside to develop products through our own R&D, but if we do not have the technology that will allow us to meet the market needs in the appropriate period of time, we have demonstrated in other areas that we are willing to enter into some sort of discussions on acquisition or joint venture or some kind of an alliance. But in the area of atrial fibrillation, we believe we've got good internal options at this point.
Let's talk for a moment about the pacemaker business. Your I series of the Thera pacemaker was recently released in the U.S. Talk some about this line.
Well, let me go back and talk a little bit about Thera, the family that originally was launched. This was probably the single greatest breakthrough in a technology in the broad sense of the word, not only in terms of product development, but manufacturability. And also it was the first time that any pacing company actually introduced a family of pacemakers at one time, 5 different versions on a common platform with a brand new programmer and improved lead capability. What this did was allow our customers, physician-based, to have a system that they could learn how to operate with in one modality, and it would cover all modalities. And it gave them a programmer that not only was applicable to the bradycardia area, but the same programmer for tachyarrhythmia. When that product was first introduced in 1994 in Europe, I believe in the springtime, we were already in discussion with physicians on what additional enhancements they would like to see. So we were able to reduce the new product development cycle for the Thera I series, which was a replacement of the Thera, which offered additional functionality, a new shape to enhance implantability and improve longevity. That allowed us to introduce that product in Europe in the summer of this last year, and then we've recently, as you noted, gotten approval for the I series in the United States in December. We expect that that product will continue to allow us to increase our market share position, which has increased in every single market around the world over the last 18 months. And we will be following that up with additional models as we move through this year. So we have never felt stronger about our position in the bradycardia area.
Let me ask you this. It would seem like it would be tough because no sooner than products get to market, you almost have to obsolete them these days. It seems as if the pace of bringing this technology to market has just been speeding up rapidly.
By design.
Yeah.
In fact, many of the programs, many of the tools that we use, and the ability to use a common system have allowed us to reduce the cycle time of new product development. We also are we're actually the only company that is back integrated in the various component manufacturing that goes into a pacemaker. We manufacture our own integrated circuits. We have wafer fabrication capability in our operations in Arizona. We manufacture our own batteries. We are solely integrated in terms of design. So we not only can bring those products to market further, but they are all building off of common platforms, design platforms, and very importantly, automated manufacturing platforms that allow us to reduce the cycle time, get the product out, improve the quality, and improve the cost position. So I think you can look forward to more of that rapid introduction of product enhancements in the future.
In the area of cardiovascular and vascular intervention, we're seeing a lot of companies focus on this area, and a lot of attention lately has been paid to it because of the pending Johnson & Johnson and Cordis merger. I know that stents are a hot area right now. Medtronic has stents on the market in other countries, but not yet in the United States. Talk some about your strategy in this whole arena.
Well, you're right. The stent market, along with the implantable defibrillator market, probably the two most rapidly growing large medical device markets in the world, and we feel we've got good, strong positions in both. Our Wichter stent, as you indicated, is approved outside the United States, and we're doing very well in Europe. We're number 2 to J&J, and candidly, we can't make stents fast enough to supply that market. We hope to submit to the FDA on the Wichter stent in the United States within the next 60 days, and hopefully somewhere in the neighborhood of a year beyond that, we hope to have approval. Medtronic in the interventional vascular business, as you know, got into that through a series of acquisitions, and it wasn't too many years ago that that business was actually losing money. And that's turned around now. We have a very complete line of catheters, both over the wire and rapid exchange. We are the world leaders in the guide market. We have recently gotten access to an angiography line. We'll have guide wires. And we are right now the number 2 company in the world in stents. Our stent has some advantages vis-a-vis J&J. They have some positions that they are strong in. And we believe that this will be a growing area, and we're investing an awful lot of research and development here. So I think you can look forward to that to be a growth market in general and for Medtronic.
Can you give us some idea how much you're investing in this arena?
I won't give you specific numbers, but I will tell you within the interventional vascular business, the stent investment is the greatest one that we have across the whole product line. I'd also comment that I think that as we view the interventional vascular business, it's not only important because of the current angioplasty market, but we believe as we look to the future, our ability to access the vascular system, not only the coronary but in other parts of the body, will be very important, not only to deliver catheters but potentially different devices. As you know, we have a large drug delivery business, and that will be necessary to access the vascular system to develop and to deliver, I should say to deliver, we won't develop the drugs, but to deliver drugs to various sites in the body. So it's important for angioplasty, but also in a broader context.
What about concerns in the market? There have been some reports that J&J will have the balloon technology to go along with its stents and may be able to lay claim to that and keep others from using that particular approach. Would you care to comment on that?
Well, we, as in all competitors, we take J&J and any large company very seriously. We also believe we have a very strong position in both the delivery mechanism of stents and the stent technology in and of itself, and we believe that we will have the capability to operate very effectively in that market in the future.
Are we likely to see any other acquisitions in this arena?
I think you'll continue to see Medtronic broaden its product line in not only the interventional vascular business in the coronaries, but in a broader context. Some of that will be through internal development, some of that will be through licensing, and it's not inconceivable that we might see an acquisition in the future. But we are committed to the interventional vascular market.
Is there anything in the works right now?
Nothing specific that I would comment on.
Okay. With regard to the neuroradiology sector, Medtronic has been building its presence on this front through acquisitions. In fact, when you bought Micro Interventional Systems, the market expressed some disappointment for Target Therapeutics because it was believed that that company might have been a perfect takeover candidate for someone like a Medtronic. Talk some about your strategy on this front, and did you seriously consider Target? I would think if you're anyone looking in this arena, probably would have had to.
Well, we believe the whole area of neurological therapy and specifically neuroradiology is going to be a growth area in the future. As you know, we've been in the neurological area both through the implantable stimulation device and the Segmnts drug pump, and we looked at neuroradiology for some period of time. When we look at acquisitions, the first thing we do is look for a strategic fit, and clearly there was a strategic fit not only in the area of MIS, but also for PS Medical, which we acquired about the same time. Generally, we will look at all companies that are in the area, and then we will go through a sort of what we think is the best candidate for integration into Medtronic, and then we get down and we look at the economics. Is it a good investment for Medtronic shareholders? We felt that Micro-Interventional Systems, all things considered, gave us more opportunity for the future compared to what the price would be, and we're very pleased with that acquisition. I can tell you got a very excited group of people out in this neck of the woods that are going to build a very good business for us in that market.
What else can we expect to see in the way of growth in this sector? Will acquisitions continue to play a role?
I believe so. I think that if you look at the neurological area in general, we continue to see a very good response to our Itrel 3 that was recently approved by the FDA. We've got some very exciting relationships with biotechnology companies in our implantable drug pump, and if any of those compounds hit, there are large disease states, Alzheimer's, Parkinson's, different types of movement disorders, ALS. That could open up tremendous opportunities for us. So I think we'll continue to see Medtronic expand in the neurological area and specifically in the neuroradiology area.
Are we likely to see any sort of frenzied activity in this front? I mean, it's interesting because there was a time where people really were comparing companies, Medtronic, St. Jude, and very basic businesses that you were in, and you've really differentiated yourselves from one another. Although everyone seems to be interested in some of the same markets, yet also pursuing very different strategies. However, given that a St. Jude, as well as others, are interested in these arenas, does it concern you that the properties that are available out there may be bought up quickly and that there's going to be some sort of frenzied activity like that and you have to get in there and play the game now? Or can you take a methodical approach going forward?
Well, I think we have and we will take a methodical approach in terms of analyzing how we will get into certain markets. When we have the technology available, we always prefer to do it internally. And we'll be spending in excess of $230 million this year in research and development, which, as you know, is far away the largest amount in the industry. We have a number of very exciting alternatives in front of us that in and of themselves would give us great growth capability. If, however, we don't have the technology inside the company to get into an area, we're not shy about acquiring or entering into some kind of a collaborative approach. And as you look at our balance sheet with cash capability that is now in excess of $500 million and a very strong stock, it gives us flexibility on a number of different dimensions. We will continue to expand Medtronic. We will do it in a stepwise fashion where we can bring value. We're not interested in being a conglomerate, and so I think you can look forward to continued growth, but hopefully in a very logical, well-thought-out fashion.
In late December, Medtronic took a 20% stake in Reprts Systems, and that you said to manage clinical data on Medtronic devices and related therapies, and you'll have some collaborative marketing, I believe, as part of the agreement with them. Why does this fit into your strategy?
When we go out and talk to our customers in the United States and around the world, one of the continuing comments that we hear is an understanding for information. The ability to understand cost structures, understand clinical pathways, understand best practices. And so we, in responding to our customers' request, and also for internal purposes to make sure we understand various cost structures and economics surrounding the delivery of various therapies, we wanted to be able to access information that we could not only provide to our customers, but also use in some of our internal development. This was an area that we could have done internally, but we felt we saw a very nice alternative, and we had surveyed the landscape, and we think this will be a good adjunct to our product line going forward.
Medtronic is on an April fiscal year. Your fiscal third quarter ends in January. What can you tell us at this point about how the quarter is shaping up?
Well, the quarter is shaping up well. As you know, we will not and do not project earnings. I will tell you what I told the group earlier today, that as we look at what the Street has us now in earnings per share for our fiscal year, the consensus is right around $1.85. Again, stating that we do not project earnings, I will tell you that we are not uncomfortable with those projections. And the third quarter is rapidly coming to a close, and we're feeling very good about how that's shaping up.
In closing, I'd like to give you the opportunity to give your outlook for Medtronic for the next several years.
Well, Medtronic, first of all, I think has never been better positioned. We have put in place a strategy that is focused on improving our market share in existing core businesses, in expanding geographically to not only serve developing markets, to improve our ability to meet unmet medical needs across a whole series of different product areas, and to continue to build the company so it is capable of handling growth, and not handling growth as a several billion-dollar company, but one much larger. We feel very strongly that we need to continue to invest in our future in research and development, and we are doing that and actually increasing that investment. We are also managing the manufacturing and the administrative area very tightly, so we have flexibility. So on balance, the strategy that was put in place a number of years ago is working, and we are now on a wave that I think will continue some time into the future.
Art Collins, Chief Operating Officer of Medtronic, thank you so much for joining us.
Thank you, Leslie.
This is L.A. Winokur for the Dow Jones Investor Network at the Hamburg & Quiz Conference in San Francisco.
We'll talk with the CEO of Medtronic. The company's buying two different companies essentially in the same business. They're getting into the diabetes market now. We will ask CEO Arthur Collins about that and take your email questions for him. And we'll do the same thing with the CEO of Dentsply, the #1 dental products manufacturer. And Medtronic pens a deal putting the medical device maker right smack in the middle of the battle against diabetes. We will talk with relatively new CEO Art Collins about that after this. Relatively new CEO, Art Collins, just took over recently as the CEO of Medtronic. They've made these acquisitions. A company called MiniMed, we've had their CEO on in the past. They're getting into the diabetes market now. These companies, along with their medical research group, make insulin pumps and things like that. So it's still a medical device business that Medtronic is known for, but we'll ask Mr. Collins about the strategy on that coming up in just a few minutes. Plus, the halftime report, it's 30 minutes. Medtronic has announced two acquisitions actually today. These companies are related though. The medical device maker squarely now is in the middle of the fight against diabetes with these acquisitions. They've agreed to buy MiniMed and Medical Research Group for $3.7 billion in cash and stock. Medtronic is traded at the New York Stock Exchange, MiniMed, the NASDAQ stock market. Here's how those two are doing so far today. MRG, by the way, Medical Research Group, is a private firm. Arthur Collins took over as CEO of Medtronic the beginning of the month. He joins us from Minneapolis to talk more about the strategy behind this deal. Mr. Collins, nice to see you. Thanks for joining us. Any belated congratulations?
Well, thank you, Bill.
What is the strategy here? Why diabetes?
Well, diabetes fits very well within our strategy to treat chronic diseases. This is a very large chronic disease in the United States. In the neighborhood of 16 million Americans suffer from diabetes. Of that number, approximately 4.6 million are insulin dependent. And we have looked at this market for a long period of time. We know the people at MiniMed. We've had our eyes on them for a number of years, and we couldn't be more happy than we are today on joining with MiniMed to fight, as you said, in this significant battle against diabetes.
This comes on the heels of Johnson & Johnson's recent purchase of Inverness Medical Technology, which is also in the same business. What is going on with diabetes? Is that a growing market, or the kinds of technology now, we're getting the upper hand on that, or why the interest all of a sudden?
Well, I think for a number of reasons. First of all, it is a growing market. Many medical experts have identified diabetes as almost an epidemic in the United States. Right now, 2,500 new individuals are diagnosed with diabetes each week, every day.
Function of age? Are we talking about an aging population?
Well, it's function of age, demographics, and diabetes is not only a problem in and of itself, but it also causes significant cardiovascular problems where we are a leader.
Right.
It's a significant cause of blindness and a terrible disease, and we feel MiniMed has significant technology that can fight against this disease.
Do these companies remain standalone entities? Do you merge your back offices? I mean, what are your plans for these two companies?
Well, they're two very different companies. MiniMed is an ongoing large organization, and Medical Research Group, or MRG, is really an R&D organization. We will look at the MiniMed organization and operate that fairly independently. It's a different market than we have participated in previously. They have a very strong management team, and we will take advantage of synergies we have inside Medtronic with technology, manufacturing, some back office opportunities outside the United States. But we want to keep that management team basically intact and support them as they grow their business.
For your bottom line, this is dilutive, I guess, for what, the next fiscal year or so?
We indicated this morning during the announcement that we expected, net of one-time charges, this transaction to be slightly dilutive in the first year in the range of 3 cents. We also said that we are looking for opportunities to offset that dilution, and we did not change the initial guidance we gave at our earnings release just a few weeks ago with EPS growth in this coming year in the range of 15% to 17% up.
Is it possible more acquisitions come for this category? Do you foresee that?
Well, it's certainly possible that we will, and in fact it's our intent, is to continue to build the franchise in diabetes. We will invest not only in internal research and development, but we'll keep our eyes on potential technology, intellectual property, and if the right business presents itself, we'd be open to acquisition.
I do have a brief moment. I wanted to get to the stent question and the development there, which I know you're hot on right now. Where does that stand, and when do we see results of the kind that elutes medicine and so forth?
Well, our coronary stent position is very strong. We're in the #1 position outside the United States and a very strong #2 position inside the United States. There was recently a significant medical congress over in Paris where we released additional information with respect to a license agreement we just entered into with AVI Biopharma to license in an antisense compound that will be coated on stents that actually gets right down to the cellular level to interdict the expression of a gene that causes tissue proliferation. It was very well received in this Congress in Paris, and we'll be bringing out more information on this in the months ahead.
Boy, the gee-whiz technology, it's unbelievable. Mr. Collins, nice to see you. Thanks for joining us.
Good to be with you, Bill.
Arthur Collins, new CEO at Medtronic, joining us from Minneapolis. Here's how the company's stock has done over the last 12 months. And today it's down a nickel at $42.90. Still ahead, our happy...
A good afternoon to you. Well, the medical device maker Medtronic has agreed to buy a pair of businesses for $3.7 billion. Medtronic will pay about $3.3 billion for Minimed, a maker of insulin pumps for diabetics. It will also shell out about $420 million for Medical Research Group, another diabetic equipment maker. Medtronic today is our stock of the day, which means you get to decide whether we add it to our fantasy money gang portfolio. Let's bring in our stocks editor, Chris Huntington, who's got more now on the company.
Thank you, David. Yeah, this is a big deal for Medtronic because the company, which already is a huge player in the medical device business, that makes pacemakers, cardiovascular stents, all sorts of hardware that help people with chronic cardiovascular problems. It's now, with this purchase of Minimed and Minimed's related company, Medical Research Group, is now a big player in the diabetes market. There are about 16 million Americans with diabetes, about 5 million Americans who are said to be insulin dependent, and this deal immediately makes Medtronic a big player in that business. There you're looking at a 52-week chart of Medtronic. Medtronic shares trading just about flat on the day right now. The deal done for Minimed at about $48 a share. That's about a 9% premium, all-cash deal. They'll pick up Medical Research Group for $420 million in cash and stock. As I mentioned, it should make Medtronic a big player in the diabetes business, should account for about 6% of Medtronic's overall sales. Medtronic sales in 2000, about $5 billion. Its profits last year, about $1 billion. So big company, strong company. It's said to be pretty much a market dominator in many of the markets that it's already in. Spoke to a couple of analysts. One of the things they point out is that the company, in order to achieve growth going forward, needs to get pretty aggressive on its marketing side. So all in all, good things for the company today, and certainly a nice buyout for Minimed.
Okay.
David?
Stick around, Chris, for more Medtronic. Let's bring in the company's CEO.
Art Collins joins us now from Minneapolis. Welcome to the Money Gang.
David, Christine, good to be with you.
Congratulations on this deal announced today. How long have you two been in talks?
Listen, this is a deal that we have probably done on both sides more due diligence than on almost any acquisition that's taken place. We've known the management team for years. We have studied the diabetes market, and this has been in the works for a long period of time.
Tell us about the diabetes market and how important it is for you to get in there. 16 million Americans with diabetes, 4 or 5 million of those insulin dependent. What kind of a growth market is this for you?
Tremendous growth market. About every day, 2,500 new cases in the United States are diagnosed. It's a very difficult disease, not very good alternatives right now. It has comorbidities with some businesses we're in right now, significant linkages with cardiovascular disease, blindness. It is a chronic disease, and it fits right into many of the therapies that we provide today, so there's a very nice linkage there. Also, some of this base technology that we have in our implantable pacemakers, defibrillators, and drug pumps fits very nicely, and we think that we can help Minimed take their growth to the next level.
Mr. Collins, tell us, if you would, a little bit about how you go about boosting marketing and sales for products like these that obviously you can't sell directly to the end users. You're going through the HMOs. Are you targeting primary care physicians, or what sort of a strategy for boosting sales for your devices?
Well, up to this point, MiniMed, and they have a very strong direct sales force in the United States and many of the developing countries around the world and the significant developed countries in Europe, are now moving beyond the endocrinologist to the primary care physician and the referring physician. We believe that we can bring marketing capability that will allow them to get that message out much more rapidly. In addition, on markets outside the United States, we already have a very strong infrastructure in place, so they will not need to invest in that, and they can primarily focus on the sales, marketing, and physician support.
All right, let's bring in an analyst into this discussion of Medtronic.
Kevin Cutler is a medical technology analyst with ABN AMRO. Welcome to the Money Gang.
Thank you.
We were just talking about this. You say you think it's a pretty good deal for Medtronic to acquire this company.
I definitely think so. MiniMed I've been covering the company for a number of years, and it's the preeminent franchise in diabetes. I think it will take the growth rate of Medtronic from around 10-11% fiscal year 2002 this year to around 15%, so it restarts their growth rate. And given that growth rate, I think the company could achieve the 2 times growth rate multiple that it has historically had, which would give it a 40 multiple and our $55 price target.
But it's not the only player in this field. J&J just bought Inverness. Does that pose a lot of competition for Medtronic?
Well, I think it's very interesting that 2 leading medical companies have just acquired, made stakes basically in the ground on diabetes, and so I think they're very complementary. Actually, they aren't competitive initially. Inverness focuses on the testing of blood glucose. MiniMed specializes in the delivery of insulin. They're very complementary, and many of the platforms that MiniMed's working on, in which Medtronic's so interested in, is on the implantable glucose sensor, which ultimately will be competitive with the Inverness technology, but at least currently they're not available.
We do want to give you a chance to ask Art Collins a question, but first I want to know what your rating is on Medtronic and how long has it been there?
We have an ad rating, which we have a buy, add, hold rating system, so it's a middle rating. We think you could be buying this stock on dips. There have been 2 major concerns of ours, that reason why we don't have it as a buy. One relates to the fact that recently they've seen a slowdown in their ICD revenue line. ICDs is one of their growth platforms, and last quarter they announced a very low single-digit growth number. And that's a concern for us.
ICD is defibrillator.
Implantable defibrillator,
yeah.
Right. It's a $1.8 billion marketplace, and they have about 51% of that marketplace.
All right. Why don't you ask a question of Art Collins, something that you would like to know about this deal or about their outlook?
Sure. Mr. Collins, I would just like to know that given MiniMed's entry into the general practitioner's office, do you position Medtronic over the next several years becoming a household name like Johnson & Johnson? So do you see other acquisitions that, again, positions you in the GP office?
Well, Kevin, you indicated a very important part of this transaction. It fits very well with our other businesses. MiniMed is number 1 in their market segment. In most of our market segments, we are number 1. As we see patients playing a much more important role in the future, we will not only continue to market and sell through our traditional sales force that calls on physicians, but we will increasingly use other forms of communication to get to the patient themselves. This will take place in internet-based marketing and other approaches, but patients are playing a much more important role in the management of their health care, and we expect to be partner with them and with physicians going forward.
Let me ask you about your growth outlook in particular. I know that your CFO earlier today was saying that $1.21 to $1.23 for earnings per share this year seems in line, 15% profit growth next year. Can you give us any kind of guidance about what this deal is going to do for your bottom line and when?
Well, first of all, with respect to the top line, one of the very attractive aspects of MiniMed, beyond being the number 1 in their field, was the fact that they are growing very rapidly. Over the last 7 years, they've had a compound average growth rate of in excess of 40%. And so we believe adding this new business to Medtronic's portfolio will provide us a growth vehicle above the corporate average. We indicated that during the call, after one-time charges, we thought that earnings per share would be slightly dilutive as a result of this transaction this year, but long-term we believe this will be an accretive addition to Medtronic.
All right, Art Collins, Medtronic CEO, thank you so much for joining us, and congratulations on your deal. Also, Kevin Cutler, ABN AMRO Medical Technology Analyst, thank you for joining us. And Chris Huntington, thanks for your stock support.
Well, now that you've heard all about Medtronic, head on down to the bottom of our homepage at CN.
Medtronic is buying MiniMed and its affiliate Medical Research Group. The total price tag here is $3.7 billion. The acquisitions will give this leading pacemaker company products for treating diabetes. That is the fastest growing disease in the United States. Medtronic will pay $48 a share in cash for MiniMed, or $3.28 billion, as we said. That is a 9.1% premium to MiniMed's last closing price. And it's buying closely held medical research for $420 million. That's both cash and stock. We'll be talking, by the way, to the firm's CEO at 2:17 Eastern Time, right here on Bloomberg Television. We're going to ask him about these acquisitions and how it shapes up for the future. Well, 3M's... Welcome back. It is 17 minutes past the hour. Let's update you now on our top business stories. Medtronic is buying MiniMed and Medical Research Group for about $3.2 billion. And we're going to be talking to the firm's CEO, Art Collins, at 2:17 Eastern Time about that deal. And investors are pummeling the NASDAQ for day 4. Right now, the tech barometer is giving back, let's see, it's giving back more than 4%. It's down about 90 points. Medtronic is buying MiniMed and Medical Research, as we said a moment ago, and Tyco is also wheeling and dealing. This diversified firm snatched up drug firm C.R. Bard for $3.2 billion. And let's take a quick look now at how the markets are faring. $85 and change now. Well, as we mentioned, Medtronic has agreed to buy MiniMed and its affiliate Medical Research Group. The total price tag here is $3.7 billion. The acquisitions will give Medtronic products for treating diabetes, which is the fastest growing disease in the United States. Medtronic will pay $48 a share in cash for MiniMed, or $3.28 billion, and it's buying, as we said, closely held medical research for $420 million in cash and stock. And joining us now from Minneapolis is Medtronic CEO Arthur Collins. And Art, thank you very much for talking with us today, and congratulations on your deal.
Thank you, Kathleen.
All right, let's talk about, first of all, your stock price went up when you made the announcement. Does that mean that you got a bargain?
Well, I think what it means is the investment community looked at the strategic fit of this acquisition, actually both acquisitions, MiniMed and MRG. They were very pleased, both from our standpoint as well as from the employees and the patients of MiniMed.
Were you aware that Tyco was just parenthetically making a deal of similar proportion with C.R. Bard and coming out the same day, or was that just happening completely separately?
That was happening completely separately.
It's an ironic day. All right, now how do MiniMed products fit with yours? I know that your strength is pacemakers. If you can have one strength in such a big company, theirs is diabetes.
Well, there are a number of different fits. Our business essentially is treating major chronic diseases, whether they be cardiovascular-based, neurological-based, or we have a very large franchise in the spinal business. As you indicated in your lead-in, diabetes is a very large unmet medical need. Approximately 16 million Americans suffer from diabetes, and about 4.6 of those individuals are insulin dependent. It's not only a big medical problem, it's a very costly problem. It's estimated that about $44 million are spent each year in the United States alone treating diabetes. Those are direct costs. And that number, when you add in indirect costs such as lost productivity, approaches $100 million. MiniMed is #1 in its field. It's got great technology. We think we can help them grow further. And as I said earlier, it's a tremendous strategic fit.
Does this speak to a larger strategy, Art, then? You buy them to bulk up on the diabetes products. Would you take a look at another kind of disease and buy a smaller company that would fill in and so on, so that eventually you would have all the bases covered, so to speak?
Well, over the last several years, we've augmented our internal growth, and we spend a tremendous amount of money in research and development, well in excess of $500 million last year. But we've added selectively through acquisitions, whether it be intellectual property, products, technology, and or companies. And this acquisition fits very well because the technology is somewhat similar to our implantable drug pump business and our implantable pacemaker and defibrillator business. These are active implantables. We're already operating inside the body. And much of the future of MiniMed is moving from external pumps to deliver insulin to a series of glucose monitors that can continuously monitor the glucose levels, and then ultimately have an internal pump that's a closed system. And operate essentially as an artificial pancreas.
So you told me off camera that you came down to the wire last night. What was the sticking point?
Well, anytime you come to a deal as complex as this one, and remember this not only had to do with the acquisition of MiniMed, but also the simultaneous acquisition of MRG, you've got a lot of moving parts. We were very late last night in discussions, and actually we were ready to go out with a press release at 6 o'clock this morning and close the deal very shortly before that.
Very much.
Still to come, we're going to continue our focus on earnings when we talk to the CEO of Medtronic. We'll also have for you the latest world and national headlines. The Daily Roundtable is ahead, too. Stick around. There you go.
Okay.
We'll come back to after 11. Medtronic's earnings keeping pace with Wall Street expectations. The medical device maker's fiscal first quarter earnings coming in at 28 cents a share, penny better than the consensus forecast. Revenue overall was up 14%. About half of Medtronic's sales come from pacemakers and defibrillators. Medtronic made headlines earlier this summer after Vice President Dick Cheney received a Medtronic defibrillator to regulate his heart. Medtronic's stock chart looks all too familiar for many companies these days. The maker has seen its stock fall from a high of $62 a share to around $40, where it's leveled off this summer. Can Medtronic keep up the pace? Joining us now is the CEO of the company, Art Collins. Thanks for joining us.
Good to be with you, Rhonda.
Congratulations on the quarter. Interesting report. You had revenues up across the board in all segments of your business there.
This was perhaps one of the strongest quarters that we had, not only in terms of the reacceleration of the top line, but the fact that it came from every one of our four major businesses, as well as a number of products that have recently either moved through the FDA or been granted panel approval for the FDA, probably the most important of which is our new heart failure device.
Well, tell us about that, Well,
heart failure is one of the largest problems, medical problems in the United States. In fact, it is the largest Medicare category expense by a factor of 2. We have a new product, which is a pacemaker type product that paces both sides of the heart to treat a subsegment of heart failure patients. It went to panel last quarter along with another product. The panel recommended unanimously that the FDA approve our product, did not recommend so for our competitor. And we're hopeful that perhaps even yet this quarter that we're in right now, that this could receive approval.
Congratulations on a great quarter. You had some really good PR, too, with the vice president, of course. That always helps. You know, I'm an aggressive investor, and historically, the biggest winning stocks in history always have some new product or something new going for them. Beside this improvement with the pacemaker, do you have anything else new on the horizon at Medtronic?
Greg, we have a number of new products and, for that matter, new therapies. In addition to the heart failure product, which, by the way, will come not only in a low-power pacemaker device, but also with defibrillation backup. We received this last quarter an approval for an atrial fibrillation claim only for another one of our defibrillators, and atrial fibrillation is the most common arrhythmia that exists today. In addition, the FDA granted expedited review of a bone morphogenic protein, which is used with one of our spinal devices to improve spine surgery, and that should go to a panel probably within the next several months. In addition, very big news is next week we intend to close 2 acquisitions, MiniMed and Medical Research Group. And MiniMed is by far the world leader in the treatment of diabetes through a series of external insulin pumps. They've got implantable pumps underway and also glucose monitors. So a tremendous amount of not only new product flow that's coming, but also going into some very large disease states.
You've got a lot going on. There was quite recently a medical journal article that raised some safety issues regarding implantable devices. I know you responded to that, but talk to us a little bit about the safety aspects, since a lot of times people hear just what's in the journal and they don't always hear the follow-through.
Right. The article you're referring to was a JAMA article, and it had to do with medical devices, specifically pacemakers and ICDs. We have responded, and not only Medtronic, but other manufacturers in the industry the medical associations. First of all, let me make it very clear that the pacemakers and ICDs and other medical devices are at a higher quality level now than they've ever been. Not only the devices, but the surgical techniques. They are providing needed care for literally hundreds of thousands of patients in the United States. The article was unfortunate because I think it mixed up some of the normal types of improvements or reprogramming that have to do with a number of diagnostics that are included in these devices, plus a much more vigilant reporting on any issue with the device. Bottom line is that the doctors that implant these feel they're the safest they've ever been. So do we, and a lot of patients that have these devices are living better lives.
Art Collins and Medtronic, we're going to end on that note. Thanks for joining us on Market Call. And we're going to get back to the
All right. Well, Dick Cheney may have sent my next guest a thank you note when he was going through heart treatment. Medtronic's a company that touches some 2.5 million people with heart problems. Out with earnings. How do they do? I'll tell you, and also talk to the company's CEO.
Market data.
This quarter than earlier thought. And Medtronic also picking up the pace today. Medtronic, the world's largest medical device maker, its first quarter profits getting a boost from increased sales of those defibrillators, and that's one of its biggest businesses. And the company says that a lot of new products in the pipeline should power up profits even more going forward, which should make this fellow very happy. Joining us now, Medtronic's CEO, Art Collins, Jr. Mr. Collins, thank you for coming.
Good to be with you, Neil.
I wonder when you get all the attention on this fellow who had the mechanical heart, whether it just draws interest to your sector.
Well, it does draw interest, but if you look at that approach to heart failure compared to what we're doing with our biventricular pacing system, we'll have an opportunity to serve many more patients than an artificial heart. And right now, heart failure is the single largest medical expense in the United States, the Medicare expense category. We have received last quarter a recommendation by an FDA expert panel to the FDA to approve the product, and we're hopeful that perhaps yet this quarter we'll see the product approved by the FDA.
The reimbursement issue, whether insurance starts covering for a lot of these pricey type therapies, all might be well and good. There's certainly nothing like a mechanical heart, to be fair. But is Wall Street reflecting that, looking at your stock? I mean, whether it's a 1 year or a 5 year, you're the darling of the group, to be clear. But looking at the stock right now, is there the fear about how people are going to pay for this, the reimbursement issue?
Well, most of our products that come forward have two major hurdles they need to go over. One is they have to produce better medical outcomes, but at the same time, those outcomes have to be more cost effective. If we look at the device I just talked about, the biventricular pacing product, we already have an approved reimbursement for a dual chamber pacemaker, and when that product is approved, there will be an uplift to that amount. So we feel that there will be adequate funds to pay for these devices.
Do you worry if the whole nation gets super healthy, or everyone starts eating wheat germ or something, that all of a sudden the demand for your products wanes as people's health improves?
Well, unfortunately, I don't think that's the case. I think if you looked at the demographics, we're seeing an older population, and our products are increasingly used by older Americans and older individuals around the world. In addition to heart problems, next week we should close on the MiniMed and medical research acquisitions, which moves us into diabetes, which is some physicians have called an epidemic in the United States.
That's the fastest growing of all the major diseases.
Absolutely, and one of the largest.
But there are a lot of players in this field, and they're all scratching for the same respect from the Wall Street community. So we take a look at some of the more notable, from Guidant to Boston Scientific to Baxter. How do you distinguish going forward?
Well, if you look at these companies, and I'm many times asked, who is your major competitor? And I say, in which segment? There isn't another medical device or medical technology company like Medtronic that operates not only in the cardiovascular area, whether it be cardiac rhythm problems or cardiac surgery or interventional cardiology, but also in the neurological area, the spinal area, in diabetes. So our objective is to continue to bring better solutions for major chronic diseases, and we think that will put us in good stead.
All right, Arthur Collins, Jr., thank you very much. Appreciate it.
Pleasure being with you.
The CEO of Medtronic, Arthur Collins. All right, well, artificial heart risk.
And for rates going forward. Let's take a look, though,
at the company Medtronic. Well, after the close Monday, medical device maker Medtronic reported a 16% surge in quarterly profit for its fiscal first quarter. But according to a Merrill Lynch research report, the company may find itself, quote, the odd man out in the arterial stent business if it doesn't make a move to increase its share of the market. Well, Art Collins is the chief executive at Medtronic, and he joins me now to discuss the company's recent quarter and its plans for the future. And we'll get to all of that in a second. But I want to talk, since we're focusing so much on the Fed, what do you think the Fed needs to do?
Well, Carol, my guess is that we're going to see another rate cut, whether it's 1/4% or more. I think the economy needs some additional stimulation, and hopefully the Fed will respond.
And you think 1/4 point's enough to do it?
Well, 1/4 point or more.
Okay, so you wouldn't mind if they were a little bit more aggressive at this
Right.
point. Well, why do you say that? In terms of your business, are you seeing a bit of a slowdown?
No, the medical device and technology industry is not tremendously impacted by the general economy. Whether the economy is good or bad, people still get sick, and we look at the overall demographics with an aging population to be very positive for our business.
So but you're not, in terms of what you're seeing currently, no impact?
No significant impact from that particular side of the economy. The greatest impact we see that will affect our business going forward is the significant number of new products and therapies that we'll be bringing to the market in the not-too-distant future.
And let's talk about that, because certainly analysts say that that's key in terms of your earnings momentum going forward. What does the pipeline look like, and when does it start to impact earnings?
Well, it's never been stronger. In this last quarter, not only did we have good, strong financial results, but we had an across-the-board increase in revenues, which is very good, because Medtronic not only operates in the cardiac rhythm, the cardiac surgery, and the cardiology area, but we have a very large and rapidly growing business in neurological, spinal, and ENT. During the quarter, we had a number of events that took place that were very positive for the future.
And so earnings momentum continues to the upside?
We believe so.
Let me get some of my homework out of the way.
Sure.
Next quarter, they've got, First Call's got you pegged at 29 cents a share for the next quarter. Does that feel like a good number?
In the call last night, we thought that both that number and the range around it were reasonable at this point in time.
Might you beat that number?
Possibly. We always try to do as well as we can, but we think that is a reasonable consensus at this point.
What are the ifs out there for your business at this point?
Well, most of the ifs are positive. The biggest question that is in front of large markets to be addressed is the date of the approval of the heart failure device. As you know, last quarter, we had a favorable recommendation from the expert panel and the FDA, and that product could be approved yet this quarter. Another major event. Next week, we expect to close the MiniMed and medical research acquisitions, which puts us squarely into one of the largest markets, diabetes, with a market leader.
In terms of earnings, what kind of impact will that all have?
In the first full year, there'll be a slight dilution of earnings that will be offset by moving toward the new accounting rules, the FASB rules for the handling of goodwill. Beyond that, we think it will be significantly accretive to Medtronic.
Mr. Collins, I want to address this Merrill report saying that you may end up being the odd man out in the arterial stent business if you don't make a move to increase market share. So what are you doing?
Well, we're doing a number of things. By the way, that same analyst wrote a very positive report on the overall quarter.
Fair, but?
Fair, but in the area of restenosis rate reduction, again, this is an approach to reduce the reclosing of an artery after angioplasty. We have a number of different efforts. Last quarter, we announced a licensing of a new biotech product, an antisense agent, to also be coated on stents, which is a different approach than many of the competitors that use pharmaceuticals. If this works, it will be much more targeted.
Just quickly, would you maybe buy another franchise of another company? Very quickly, 5 seconds.
5 seconds, we're always looking, but we feel very good right now where we're positioned.
Art Collins of Medtronic, thank you so much. And coming up next.
Five minutes, the brain shows you how he can bend spoons. Medtronic CEO will talk to us, and Kramer's got more thoughts to share. We'll ask him. Still to come, a hot hand from the small cap arena shares his stock pricing strategy, plus the briefcase indicator. And next, with the boomers getting older, at least some of them, medical devices may be a smart play on Wall Street. We'll talk profits with the CEO of the world's biggest maker of medical devices, Medtronic, next. This is Squawk Box on CNBC. Medtronic's profit pace a little quicker than expected. World's largest maker of medical devices says its fiscal first quarter profit rose to 28 cents a share, a penny better than the estimates, up from 24 cents a year ago. Revenues increased 11%, net income up 15.7%. Medtronic crediting renewed strength in the market for products used to treat irregular heartbeats. The company adds it expects second quarter earnings and revenues to rise by at least 15%, and is comfortable with analyst earnings estimates of 29 cents a share, which came from management in the first place. Medtronic stock is trading at the lower end of its range, high of 62, low of 40, currently around 45. Let's get more on the company. Joining us now in the studio is Arthur Collins. He's Chief Executive Officer of Medtronic. Double-digit growth, top line and bottom line. Stocks in the bottom end of the range. What don't we get here?
Well, we had a good, solid first quarter. Not only were the financials in good shape, but we announced a number of major events during that first quarter, getting into the diabetes market with the acquisition of MiniMed and MRG, the very important FDA panel recommendation to approve our biventricular pacer for heart failure. And as you know, heart failure is the single largest Medicare category in the United States. Some additional new products introduced. It was a very solid quarter beyond the financials. So what don't you get? I'm not sure. We're very pleased on how we finished the quarter and the prospects going forward.
MiniMed closes tomorrow, Art, if I'm right?
No, MiniMed should close next week.
Next week.
Right.
Is there much arbitrage pressure on it? I mean, when you're issuing shares?
Not anywhere near. This is a cash deal.
Okay.
If we were out there with shares under the old accounting rules on pooling, there would have been a tremendous amount of arbitrage, but this is a cash deal.
Okay, what I want to get is that I'm trying to figure out whether this is one of the situations where you'll be able to take numbers up once that deal closes because of synergies.
Because it's purchase accounting, the revenues will be incremental to where we were last year because we won't go back and restate as we would for pooling accounting. We believe there's synergy in place, not only from a manufacturing standpoint, some of the R&D, as you know, we're already in implantable drug pumps for pain and spasticity. But very importantly, we're going to help MiniMed as they expand outside the United States. Their share inside the United States is about 80%. Outside the United States, only about 25% because they didn't focus, and we'll help them in that regard.
The internet, of course, becoming more and more part of everybody's business. And I think people are finally realizing it's not a new economy, it's just a new way to conduct the old economy. You have a deal with WebMD. Bring us up to date. How is that going? Is it living up to your expectations?
We have a relationship with WebMD to really do two things. Number one, we work with WebMD to work on our web page, so we're up to date using the greatest technology. But also, WebMD is the largest healthcare portal, and they will highlight certain of our therapies to make sure that patients have adequate information. You know, there's a lot of information going around on the internet, and we think WebMD is a very responsible portal for individuals. When I go in and speak with physicians, it's amazing how individual patients are becoming much more interested in managing their health care. So they're walking in with reams of data. We want to make sure it's the right data.
I sense from your answer that there's no way to quantify whether this is doing you any good.
Well, we think it is doing good, but sometimes...
You think it's doing good?
Well, we think it's doing good. We're tracking it on number of hits. Obviously, that's improved. The best thing we can do is to come out with needed new therapies and get that information to patients. Heart failure will be a great example in this regard.
What about I don't know how to describe it, but it's the joint effort you have with J&J, GE Medical. It's kind of a global exchange.
Right.
Where does that stand?
That comes at it from a little different direction.
Yeah, that's a B2B kind of thing.
That's really making the hospital's ordering process, their supply chain management, much more efficient.
How is that working?
That's working well. It's, again, in its early stages. We announced with J&J, GE Medical Systems, Abbott Laboratories, and Baxter, and ourselves were the 5 founding partners. What this allows a hospital to do is, rather than have different medical device and medical products companies order through every single different system, there'll be a common web-based ordering system. And it's just now starting to roll out.
All right. Then we'll check again.
All right.
A little later. Arthur Collins, thank you very much, sir.
Thank you.
Arthur Collins is Medtronic's CEO, coming in with double-digit growth, top line and bottom line. Plenty more to come.
right. Well, take a look at this stock chart. It belongs to a company called Medtronic. It's a medical device maker, but it's the stock that could use a stent. Now the company is hinting that this might be as bad as it gets. A buying opportunity? Medtronic's fiscal second quarter net did fall 78% when you throw in acquisition and related costs. But before all of those charges, earnings were actually close to $395 million, better than expected, and revenues were up 15%. New products could pad those gains even more. I spoke to Medtronic CEO Arthur Collins a short time ago and asked him why the stock chart doesn't reflect how well the company's doing.
The stock, like a lot of stocks, has been under pressure, and I think investors were waiting to see how the quarter would come out. They're waiting to see some of the new products actually be approved by the FDA, was waiting to see the MiniMed acquisition and how that was integrated. And all I think that is starting to now roll out. We're going to have, over the next 6 to 9 months, the largest number of new products introduced in Medtronic's history.
This new future, I mean, people forget that cardiac rhythm management, that moved up 7%, vascular unit up 14%, products associated with anything having to do with heart surgery, growth rate of 50%. But Wall Street isn't getting that story. Does that bug you?
Well, I think if you look today in a significantly, or yesterday in a significantly down market, you saw our stock go up by 4%. I think that's a reflection of what people are now starting to see come out on multiple growth platforms.
There's also the issue of how much people are going to be compensated for this, whether insurance companies. A lot of the stuff that you do, I mean, is non-invasive, so it's not as expensive as, you know, open heart surgery and going to that kind of extent. But it is an issue for a lot of people who are looking at cost cutting among both private and government sources. Does that worry you? Or does that feed into you?
It's very important when we start to come forward with a new product. Our scientists and engineers are told two things: come up with better medical outcomes and come up with better cost-effective outcomes. Now, that's measured over the life of a therapy, but if you look at many of our products coming forward, they're not only better in terms of the medical outcome, they make good economic sense.
The U.S. Food and Drug Administration has approved Medtronic's Activa system for expanded use in treating a broad range of symptoms of Parkinson's. The implanted device, which works by sending a series of electric shocks to the brain, is already approved to treat tremors related to the disease. And joining us from his company's hometown of Minneapolis to discuss the significance of the FDA's decision, which came after the close of trading yesterday, is Medtronic CEO Art Collins. Art, good morning.
Good morning, Dean. Good to be with you.
Good to have you with us. So explain this. This is essentially you can now work both sides of the brain to impact some of these the symptoms?
The FDA approval that took place, as you mentioned, after the market closed yesterday, now opens up a therapy that incorporates a pacemaker-type product. Rather than the lead going to the heart, the lead goes down into the deep portion of the brain, into the thalamus and the subthalamic region. And we had an approval for tremor, but now that indication has been expanded to include Parkinson's, to treat symptoms such as rigidity, slow moving, and also shaking associated with that disease.
How many Parkinson's patients do you think would benefit?
In the United States, there are approximately 1 million individuals that suffer from Parkinson's disease, and about 100,000 come into that population each year. We estimate that about 10% of those individuals are in advanced stages of Parkinson's, where they've had drug treatment that has either worked and then lost its efficacy, or that they are drug refractory. And there are many side effects associated with these drugs: uncontrolled tremor, and the nice thing about this particular therapy is that it is reversible, and the clinical data is very convincing.
So this is not necessarily something that would have to be used in conjunction with the drug treatment?
Well, many times there is a co-treatment with a product that is called levodopa that would be used in conjunction with this brain stimulation, and you would either require a less amount of the drug, or in some cases you wouldn't be taking the drug at all because you'd be drug refractory.
Right. Now, do you see any additional applications for this?
Well, we continue to do a lot of research on stimulation. Medtronic started with stimulating the heart, but right now, in addition to the indication that we just received, we're stimulating the spinal cord to treat pain and movement disorders. We're stimulating the sacral nerve to treat incontinence. We're looking at stimulation to treat many neurological disorders, including depression, epilepsy. We're working on pacing the stomach for gastrointestinal problems. I think the applications of using electricity in the body are significant.
So those with Parkinson's, they can, if the doctor indicates that this may well be indicated, it would be available how quickly?
We are ready to ship as of today. We've been waiting for this approval for some period of time. The product has been available outside the United States since 1998. We already have trained 200 stereotactic neurosurgery centers in the United States that are using this basic type of therapy to treat tremor. So the uptake of this, we expect, will be very rapid.
All right. Medtronic CEO Arthur Collins, we thank you for your time today.
Thank you, Dean.
Medtronic has received government approval to market its brain implant to be used in patients with Parkinson's disease. The Activa Parkinson's Control System, initially approved by the FDA in 1997 for controlling tremors on one side of a patient's body. Now the FDA has been persuaded to give the device additional approval so it can be used on both sides of the brain. Let's find out more about this product. Joining us now from Minneapolis, Art Collins, CEO of Medtronic. Good morning, sir. Thanks for being with us.
Good morning, Mark.
The initial approval was for only one side of the brain?
Well, the initial approval we received was to treat tremor. The approval that we just had come through yesterday from the FDA expands the indication to Parkinson's disease that covers not only shaking but rigidity, slow-moving aspects of the population, which, by the way, in the United States, there are about 1 million people that suffer from Parkinson's. About 100,000 new patients come into that population each year. And we think about 10% of that population that's in advanced stages of Parkinson's are candidates for this therapy.
Well, what do you have to be or do to be a candidate?
Well, first you've got to suffer from Parkinson's,
right.
And the first therapy is a drug therapy, a drug called levodopa. And in many cases that will control Parkinson's, but in some cases the patient is drug refractory or the drug over time loses its efficacy. And then you are a candidate for this therapy, which is a reversible therapy. It's a therapy that we already have in place for tremor. So it's a significant, we think, one of the biggest breakthroughs in 30 years in treating Parkinson's.
All right, so if there's a population of roughly 1.5 million Americans with the disease and 10% are candidates, that's only 150,000 patients, correct?
Somewhere in that neighborhood, and that's a fairly significant number, particularly if you're one of those that suffer from Parkinson's. This is also a fairly significant approval from Medtronic's standpoint. These devices sell for approximately $10,000, and if you're going to treat both sides of the brain, that's $20,000. So,
oh, you mean you need 2 devices for one brain?
Well, what you treat one side of the brain that will cover one side of the body and the other side of the brain for the other side of the body.
I see, and they cannot be managed with only one device. You need a device for each.
You have to get 2 leads in.
How effective is this against these other symptoms that we were talking about? Tremors we know about, but there are, as you said, other things, speech, facial expressions, muscle rigidity. How effective is your device?
Very effective, and that's one of the key pieces of information that the clinical trial was put together to prove. The FDA took a lot of time to look at this. As you indicated earlier on, we've had this for tremor in the United States since 1997, and it's been available outside the United States since 1998. So there's a tremendous amount of clinical data, and efficacy is not a question.
Mr. Collins, this is David Beard. Do you plan to expand this to other indications on top of Parkinson's? And second, is the device reimbursable?
Yes. Well, first of all, on the reimbursable, we have reimbursement in about 2/3 of the 52 Medicare categories or areas in the United States, and also a number of private payers are reimbursing this. As to applications elsewhere, I think if you look at how the body functions with a lot of chemical, electrical activity that goes on, we're very involved in treating conduction problems in the heart. We're using electrical stimulation not only for the brain but the spinal cord. We're treating the sacral nerve to treat incontinence. We're looking at other neurological disorders, epilepsy, depression, dystonia. So we think we're just scratching the surface on the application of this technology.
How many of these devices have you sold since 97, 98?
We've sold in tens of thousands. It's not a question. And the nice thing in the United States, again, the institutions that will be implanting this, there are about 200 stereotactic neurosurgery centers. They're trained and they're already implanting for tremor.
Okay. Mr. Collins, thank you very much. Appreciate it.
Thank you, Mark.
Art Collins is CEO of Medtronic with some good news out today. We're going
This is CNBC's Wake Up Call with Liz Clayman and Carl Quintanilla, live from the NASDAQ market site in New York's Times Square.
On a rainy Monday morning, we wish you good morning. Welcome to the second hour of Wake Up Call. I'm Liz Clayman.
And I'm Carl Quintanilla. In this hour, the CEOs of Gateway and Medtronic will both be in.
Now, Medtronic could be on the verge of benefiting from a new pacemaker, and Gateway is in the middle of a fierce price war.
Gateway's Ted Waite will talk about that. He's also going to unveil some of his company's latest products right here on the program.
Yeah, he brought some toys.
Yes.
He's going to show them to us that you haven't seen before. That's all just ahead. But first, we've got all kinds of news breaking on Quest. They're what, Pat, amending a $4 billion bank credit line there?
Right on, exactly. Their bank credit facility, they said that they expect to be cash flow positive in the second quarter of 2002. I think I triggered that stock. Let's see if we can throw that up. Yeah, because you can see how beleaguered the stock has been overall. They amended and increased their debt to EBITDA coverage limits, which is pretty important. And they say that over the next year, this will service all their operating concerns as well as their debt obligations, and they see that as a positive development. We'll see if that plays out in the stock. Stock sitting at $8.68. Johnson & Johnson is going to be a big story, in part because it's part of the Dow, and we're getting all kinds of research analysts weighing in on this. This is the one-year study coming from Europe, the two-year study coming from Brazil as far as restenosis and their drug-eluting stents. So you've got Credit Suisse First Boston weighing in on it. Bank of America, I told you about last hour, saying that this is a phenomenal freedom from restenosis, and they say nothing short of spectacular, these results. Deutsche Bank, Alex Brown, says it has all those positive aspects. The one caveat here is that they did have a problem with one of their tests in the Netherlands, and that was previously reported, so they don't see a lot of downside in Johnson & Johnson. Of course, the stock over the last month, you can see at the very end of that chart how the stock has moved up going into this ACC. They weren't the only ones reporting. Boston Scientific also had a new application for a coronary stent system, and they had FDA approval on several of their other cardiovascular products, so see if there's any play in Boston Scientific. Medtronic, of course, you're going to be focusing on that, so that'll be in play as well. You might want to watch McAfee as a Network Associates that owns 3/4 of McAfee, wants the other quarter that it doesn't own, and they're offering 6.75 shares. That's equivalent to almost $19 a share, $18.64, given where Network Associates closed. The Network Associates said that because of the stock issue, they will affect the numbers by a penny a share. But you can see how McAfee might be a bit of a play there. And then after the market closed on Friday, Unocal, the oil and gas production company, indicated that they're going to make $1.40 to $1.50 in 2002. Previous guidance had been $1.10 to $1.20, and the stock popped $5. Too bad I couldn't get that chart to work for you. My apologies. Come back for more.
We sure will. Thank you, Pat. Yeah, he wants to be back in that spotlight. All right, in just about 11 minutes, we're going to go inside the field of medical development with Medtronic CEO Arthur Collins.
He is hoping his company's on the verge of getting FDA approval for a device that could revolutionize, some say, the pacemaker industry. That's a wake-up call exclusive.
Also just ahead, a March box office record. One movie opened up this week that did incredibly well. We'll tell you about it when Wake Up Call comes right back. Stay with us.
Carl, Liz, back to you.
Thank you, Chris. Still ahead this morning, Medtronic awaits approval for a new heart failure device.
If it goes through, it could give the medical device makers a huge boost. The company is expected to give a very healthy forecast from the American College of Cardiology today in Atlanta. Before that happens, we'll have the company's CEO live and exclusively. That's next.
And don't forget, you can send us your emails at any time. Wake up call at cnbc.com. Medical device maker Medtronic ended the week on an uptick after the company announced it expects fourth quarter revenues to grow about 18%.
Shares closed up last week more than $1 to $46.08. The company is presenting its healthy forecast in a webcast from the American College of Cardiology today in Atlanta. But before it happens, Art Collins, CEO of Medtronic, joins us live from Atlanta to give us his outlook on the company. Art, it's good to see you.
Good morning.
Good to see you, Liz and Carl.
Let's talk about NSYNC, not the band, obviously. You got on March 5th, you got the panel recommendation. Some called it a bit of a nail biter. How confident are you this is going to go all the way through the FDA approval process?
We're confident. As you may be aware, we have the only device to treat heart failure using biventricular pacing, a pacemaker that paces both sides of the heart. That product was approved in August of last year. The panel that met on March 5th looked at a product that has defibrillator backup, and we're hopeful that will be approved in the next several months.
The vote was 6-5, and I guess I would just have to say, Mr. Collins, that if I needed one of these processes or this device, that would make me a little nervous that there were 5 people on this panel who thought that it wasn't ready for this kind of approval.
Well, the vote previously in August of last year was unanimous. What the panel raised this year was some information that we will provide in follow-up, really having to do with, in addition to the major benefits in the quality of life of heart failure patients, is there a significant increase in mortality? But the data that will be presented here at the American College of Cardiology, I think, will confirm that this therapy is very efficacious in providing an opportunity for probably about 15% or more of the 5 million heart failure patients in the United States where pharmaceuticals have just not been able to turn around the progression of that disease.
Mr. Collins, talk about the actual market for this now over the next 6 months or so, because there's so much attention being placed on the product, but let's try to tie it back to how it's going to help the bottom line.
Well, to begin with, heart failure is a very significant issue. I mentioned 5 million people in the United States. It's estimated that approximately $40 billion are spent on the treatment of heart failure in the U.S. each year. 15% of those people we said would be candidates for these products. We are currently annualizing with just the one product approved at approximately $200 million on an annualized basis, and we've said that within 5 years we expect that this market can generate for Medtronic in excess of $1 billion.
If we could broaden it out a little bit, I know that company-wide you reaffirmed your outlook recently, but I'm wondering if you could address the idea that a lot of people on Wall Street are talking about, that you're pretty reliant on acquisitions to grow. Can you really maintain the promised growth rate without increasing reliance on acquisitions going forward?
Yes, well, one of the things that the acquisitions have allowed us to do is to put together a series of platforms, and that combined with our internal growth, I think, positions us as the broadest based medical device and technology company. When you look at our core business of pacemakers and implantable cardioverter defibrillators being added to by indications for heart failure and atrial fibrillation, we also have very large markets in diabetes, which, as you know, has been referred to as an epidemic in the United States. We most recently had an approval for a pacemaker-type product that, rather than going to the heart, goes down into the brain to treat Parkinson's disease. Another FDA panel recently gave us an approval for a growth factor to be used with our spinal cage and spinal surgery. So we think growth can be continued principally because we're in a number of different platforms.
Sounds like you've got some great things in the pipeline. You just reiterated fourth quarter prospects for earnings per share. Can you give us some guidance? And when is all of those things that you mentioned in the pipeline, they so depend on the FDA approval, of course, and so it's almost like throwing darts at a board. What do you do to enhance shareholder value between now and then?
Well, one of the nice things that's already happened is many of those products have recently been approved. As we exited last year, as we talked about earlier, had the NSYNC product, the pacemaker for heart failure, approved. We have a new pacemaker, the Kappa 900 approved. We've just recently had a new implantable cardioverter defibrillator, the Marquis approved. We have a new programmer that programs all these devices, expected to be approved in a month. We have a new insulin pump that was just introduced within the last month. And so while the FDA is extremely important on the ongoing review of products, the beneficial aspect of products already approved, we think will play out over the next several quarters.
Mr. Collins, we got the news today, Johnson & Johnson saying that their new drug-coated heart stent keeps arteries from clogging for up to a year. They hope to get this product out well ahead of all their competitors. We're still waiting to hear about products from you. Do you see yourself losing some ground here when it comes to the stent business, which obviously has become a huge focus for a lot of Wall Street observers?
Well, the vascular business makes up about 12% of total Medtronic revenues, so it is not as important as for some companies in this field. You're absolutely right. J&J with their drug-coated stent using a drug called rapamycin is ahead of the rest of the field. One thing about the interventional cardiology business is that as new products come forward, there is a tendency to try those new products and shift. So that while we, along with several other competitors, are behind Johnson & Johnson, we all have products that are in the development cycle and should be coming out in the next year or so.
Thank you so much for joining us.
Mr. Collins, thank you very much. Art Collins, CEO of Medtronic, this morning joining us live from Atlanta.
This is CNBC's Closing Bell with Maria Bartiromo.
Then more on new innovations on CNBC today in the medical device business. We'll talk live with the CEO of Medtronic. We'll talk about his company's new products to combat heart failure. Stay with us. A lot to come on the Closing Bell. Back in a minute. 5 million Americans suffer from congestive heart failure, which is responsible for more hospitalizations than all types of cancers combined. Medtronic, the world's largest medical device maker, recently received U.S. approval for its InSync ICD, an implanted combination pacemaker and defibrillator. Here's a look at how the stock has performed year to date, and Medtronic shares are lower today along with the rest of the market, down about 4% to 36.07. Joining us live from Salt Lake City, Utah, Art Collins, Medtronic CEO. Mr. Collins, nice to have you with us.
It's good to be with you, Maria.
Well, I think before we talk about defibrillators, I think we should really look at this market and really acknowledge the fact that the market is plummeting today, Mr. Collins. It's down about 401 points right now at the lows of the afternoon. How are you dealing with this stock market?
Well, I'll tell you, what we're looking at is not so much what the stock market is doing. We're trying to focus on managing our business for the long term. We're in this for the long term and doing what is best for our customers and the patients they serve.
I could imagine, though, that the stock market has become a real topic of conversation within a whole host of businesses as 401k plans lose ground and money continues coming out of the stock market.
Oh, I think it's a topic of conversation in all companies in the United States and clearly affects a lot of employees.
Okay, let's talk a little about your business and, of course, the coated stent business, as well as your InSync ICD has been really talked about so favorably recently as the potential for the market, I guess, continues getting larger. Is that right?
That's right. We're fortunate at Medtronic in that we not only are participating in the congestive heart failure market, you alluded to at the top of the program. I know Boston Scientific was on earlier talking about coated stents. We have products under development in that area. But we also recently received approval for a bone morphogenic protein to be used with our spinal cage and spinal surgery. And earlier in the year, we're approved for our Activa brain stimulator to treat Parkinson's. So we are fortunate we're operating in a number of different segments of this industry.
We are looking at the InSync ICD right now on the side of the screen while you are talking. Why don't you explain to us exactly how this device works?
Well, first, let's talk about congestive heart failure. You indicated at the top of this piece that it's a very significant healthcare problem in the United States. It affects approximately 5 million people each year. In the United States, we spend approximately $40 billion. So it not only is a significant medical problem, it's a costly medical problem. Last fall, we were the first company in the United States approved for a pacemaker-type product. Then rather than just pacing the right side of the heart, paces both sides of the heart to put the heart back into effective pumping capability. And that's what heart failure is. It's the heart's inability to pump enough blood. Some patients that suffer from heart failure also are at risk for a sudden cardiac arrest. And the product that you just alluded to, the InSync ICD, not only treats heart failure, but it gives defibrillation backup in case that patient goes into cardiac arrest.
All right, Mr. Collins, continued success with that. Thank you very much.
Thank you.
Art Collins, Medtronic CEO, joining us live on his whole host of products.
This is Lou Dobbs' Moneyline for Friday, November 1st. Sitting in for Lou Dobbs, Jan Hopkins.
Now, our CEO of the week. Tonight, we are focusing on Art Collins of Medtronic. He leads the company that introduced the first implantable pacemaker 42 years ago. Medtronic is still outpacing its competition. The firm says that is due, in part, to some of the strongest corporate governance rules in the United States. Hardly a month into his tenure as Medtronic's CEO, Art Collins had a problem. Sales of the company's core business were slipping. Collins himself complained to the press that mid-single-digit growth would be something we live with for a while. But a year later, sales were soaring, up 33%, a result of Collins and his team quickly bringing new and improved products to market. And it didn't hurt to have a high-profile patient.
The brand we put in was Medtronic, Jim WDR.
Well, we're very fortunate at Medtronic because we've had a mission statement that our founder wrote back in 1960, and it hasn't changed one word since that time. It talks about the fact that we are really in business to alleviate pain, restore health, and extend life.
Collins has been chief executive of Minneapolis-based Medtronic for 18 months, adding the title of chairman in May. He's actively involved in just about every aspect of the business. That includes everything from discussing cancer treatments with doctors over lunch to briefing members of his sales force on new cardiac products. The rest of his time is spent seeing to it that every one of his 28,000 employees is happy. A commitment that's written into Medtronic's 42-year-old mission statement.
Individuals ought to have the opportunity to move around in different parts of the corporation, whether they be individual product lines within either a certain geography or perhaps different geographies, as well as an opportunity to get different functional experience.
Before becoming CEO, Collins served as the company's chief operating officer during a period when revenues quadrupled. When many corporate leaders were playing Wall Street's earnings game, Collins and his predecessor resisted. And the company prides itself on what Collins says is a fiercely independent board of directors.
They have access to any employee within the organization they'd like to talk to. They also have independent experts, lawyers, outside accountants, compensation consultants that they can call on at any time. And we feel it is a very important part of corporate governance, but we also look at it as a very important part of the success of Medtronic.
Now, we should point out that Collins is the only board member of 11 who is also part of the management team. And although the company does not currently expense stock options, their value is fully disclosed in the company's financial statements. So we congratulate Art Collins, the CEO of Medtronic, our CEO of the week.
Good morning. From Bloomberg World Headquarters in New York, I'm Brian Sullivan, and you are watching Bloomberg on the Markets. Okay, thank you very much, Lisa Gianni. After the break, we're going to focus on Medtronic. The maker of heart devices boosted profit by 34% last quarter, and now a government panel ruling may have more Medicare patients use its products. We're going to discuss the impact of that ruling with Medtronic CEO Art Collins when we come back. Welcome back to Bloomberg on the Markets. Shares of Medtronic have opened down more than $1 after the close of trading yesterday. The world's leading maker of pacemakers reported a 36% rise in net income as device sales rose 24%. And the company, along with Guidant and St. Jude Medical, got a recommendation from a panel that could help expand the use of a heart device called the implantable defibrillator. Got it. Joining us this morning from Minneapolis to assess the impact of that ruling and the outlook is CEO Art Collins. I can't believe they had me say defibrillator. There we go again on the air, but managed to squeeze that one out. Brian. Mr. Collins, thanks for joining us.
It's good to be here.
Let's talk about this panel. This is something that's important. It was just a panel, and it made a recommendation to expand the use of the implantable heart device here. What is your expectation internally, and I want to say making a forecast then, on whether or not this recommendation will actually turn into a full ruling?
Well, first of all, some background. the expert panel was making a recommendation to the Center for Medicare and Medicaid Services with regard to coverage for a new indication for implantable cardioverter defibrillators. CMS, or the Center for Medicaid and Medicare Services, had asked the panel to tell them whether or not the study was conducted correctly and whether or not the data supported this new indication. And the panel voted unanimously, 7-0, that the study was conducted correctly and the data was convincing. So we would expect this would be positive news. Now, in our last quarter that we just released yesterday, our implantable cardioverter defibrillator sales were up over 50%. So we think that this is just one additional piece of good news in a string of new indications for implantable defibrillators.
Okay. If this does come to pass, the full ruling, then what are your internal expectations for actual sales growth? Can you put some hard numbers to what you're expecting?
Well, we clearly have run 2 quarters in a row with growth that's been in excess of 50%. We're going to start to hit some more difficult comparables, but this is a market that is significantly underpenetrated. So I would expect that longer term, this market ought to allow for growth well in excess of our corporate average.
And then let's talk about competition then. How do you differentiate yourself? I wouldn't call it necessarily a crowded field, but definitely you've got Guidance, St. Jude Medical, some other competitors out there. How do you then differentiate yourself to drive Medtronic sales?
Well, we have about half of the market, and the differentiation of product is not any single item. It has to do with the number of indications that a device can bring forward. We not only have an implantable defibrillator that provides support for traditional uses in ventricular tachycardia and ventricular fibrillation, but we also have an indication for heart failure, which is a significant new indication and treats a very large patient population. Ensuring that the product has the correct algorithms, that it is easily programmable, that the size is appropriate, is very important. So there are a whole series of items. Now, we also mentioned that within the next quarter, we will have a next generation implantable defibrillator coming to the market, which will continue to, we expect, extend our lead.
Let's talk, move away from defibrillators for a second. I want to talk drug-coated stents. When do you anticipate FDA approval of the first drug-coated stents, and then when would your version come to market?
Well, I can't make a prediction on when the first stent will come to market. Most individuals believe that the company in the lead right now is J&J.
And Boston Scientific getting a big win in the courts a couple of months ago, right?
That's right. Boston Scientific, from a development standpoint, is probably somewhat behind J&J. We announced that last quarter we started our human trials for our drug-coated stent. We won't be the first to market, but we do believe that we will, when we come to market, we'll probably have a better stent, and we have what we believe is a very fine coating that we the drug and the polymer that is used to attach that. But
I was going to ask you, is there any kind of a patent differentiation between you and some of the other stents out there?
No, I don't think patents will play significantly into the quality of the stent. There's a lot of intellectual property that obviously is required when you bring products to market. But in terms of performance, we feel we've got a very fine stent, and our clinical trials will continue. And we would expect that we will not be first to market, but we'll come in with a very competitive product.
Okay. Art Collins, CEO of Medtronic, joining us from Minneapolis. Thank you very much for your time today, all right?
My pleasure.
Try to stay warm.
All right.
So then, Medtronic's earnings keeping pace with Wall Street, but what will healthcare reform mean for the firm? CEO of Medtronic joins us next. This is Squawk Box on CNBC. We're back. The world's biggest medical technology company says brisk sales of its irregular heartbeat devices helped drive sales for its fiscal third quarter. Medtronic reported 35 cents a share, in line with first call expectations. Net income rose 35%, $427 million. Revenues were up 20% to $1.9 billion. Company also says it'll match analysts' expectations for its fiscal fourth quarter of 40 cents a share. The stock has doubled over a 5-year period, going to the mid-40s from about 25. So can the company keep profits pumping? Joining us now from Minneapolis, Art Collins, Chairman and CEO of Medtronic. Mr. Collins, good to see you again.
Good morning, Mark.
So your business continues to do well. I guess people are still wearing out parts, huh?
Well, we had a very good quarter. As you indicated, revenues were up 20%. Of particular interest was our largest business, cardiac rhythm management, which is a series of pacemakers and implantable defibrillators for various cardiac problems, was up 24%. Also, our spinal business was up over 35%, and these two businesses collectively represent about 60% of the company, and collectively we're up over 25%, so solid quarter.
I think everyone's familiar with the pacemakers and things like that. They understand the concept of electrical stimulation to the heart, but talk, if you will, for a bit about this spinal part of your business. I find that absolutely fascinating, and obviously you've only just begun.
Well, we've been operating in the spine for a period of time with electrical stimulation devices and drug pumps for pain, but we acquired a company several years ago that was the leader in the spine business. These are products, instrumentation, that are used to correct a number of spinal problems, some deformities, some just trauma, and also as individuals age. What's been very interesting, Mark, is that we move beyond simply providing instrumentation for the spine. One of the newest products is a growth factor, which called Infuse, which helps in spinal fusions and obviates the need for a second surgery, good medicine, good outcomes. Also, we're able to access the spine now in much less invasive ways. So it's a big growth area, and we continue to move the technology forward.
The spine, of course, is kind of the main electrical conduit of the body. It holds, it seems to me, I'm just a layperson, it seems to me, if you learn to manipulate this, you can impact almost any part of the body.
Well, there's two aspects of the spine. There's the structural aspect, and that's the portion of the business that grew over 35%. So if your spine deteriorates in some way, we can stabilize the spine, which not only gives better stability, but it also reduces the amount of pain. The electrical stimulation portion, which is in another part of our business, also provides significant ability to treat pain. And then, as you've indicated, electricity runs all over the body, so whether it be in the spine or the heart or the brain, our ability to correct those electrical challenges and problems can treat a whole myriad of different disease states.
Mr. Collins, you own a business called MiniMed that makes insulin pumps, and their largest competitor, Disatronic, was just recently acquired by Roche. How do you see this additional competition affecting you going forward?
Well, we are the world leaders in the treatment of diabetes through external insulin pumps, and we acquired that business about 1.5 years ago. We've continued to see good growth in the business, and Disatronic was a smaller competitor, had run into some problems recently. It was acquired, or at least the announcement is made that Roche will acquire. We think that this is positive for the overall industry, because one of the things we've been working very hard to do is to get information out on the use of insulin pumps. And if we can get a strong company like Roche to help in terms of market development, that's what really is going to drive growth in this business. We're very comfortable with our new product pipeline coming in this business as well.
How much of a threat, though, to that particular business, the insulin pump business, are some recent rather dramatic developments regarding the transplant of certain cells into diabetics' livers, which can, at least the experiments have had dramatic success?
Mark, you're referring to islet cells that there's been a lot of research on, but most of our analysis to this point indicates that while we certainly think this is an opportunity for the future, the clinical application of islet cell transplant, and keep in mind there's a tremendous issue around how you keep these cells viable, we think that is well off into the future. We are also looking at a whole series of additional advances beyond simply external insulin pumps to make sure that we're continuing to take a lead in the whole treatment of diabetes.
So it's not an example of someone coming up with a better router to put you out of this particular business?
Certainly not in the near term.
All right. Thank you very much, sir. Appreciate your time.
Good being with you, Mark.
Art Collins is chairman and CEO of Medtronic.
Thank you, Miles. Good evening, everyone. Tonight, a new travel alert because of the SARS virus. The Centers for Disease Control has reinstated its travel warning for Toronto, Canada's largest city, its main business center. We'll have a live report for you from Toronto. Coming up next, Exporting America tonight, protecting jobs in this country, what some companies and the government are doing to keep jobs in this country. And our CEO of the week has his company outpacing the competition. That story and a great deal more still ahead. Stay with us. Our CEO of the week maintains an impressive growth rate by relying on innovation, an industry that requires constant change in order to keep pace. Medtronic is a leader. The company's leader, Arthur Collins, our CEO of the week. Medtronic made the first pacemaker 46 years ago. Today it has more than $7 billion in sales. Art Collins spends a lot of that money on research and development. Products less than 2 years old now produce 2/3 of Medtronic's sales.
We're fortunate in that we currently are positioned in very large growth segments that, if we continue to execute well, offer us the ability to grow and meet our stated long-term corporate objectives of a minimum of 15% top and bottom line without acquisitions.
The core of its business, the defibrillator that regulates the heartbeat of this famous patient. Medtronic is also a top brand in vascular, diabetes, and spinal surgery markets. The company's had its missteps as well. Nearly 2 years ago, Medtronic lost a patent battle to rival Boston Scientific on a stent design and was forced to stop selling it.
We've got the strongest pipeline that we've had in history. We have new products to treat congestive heart failure, which is one of the most costly medical problems in the United States. New products to treat sudden cardiac arrest. We have new products to treat neurological and spinal disorders, new insulin pumps to treat diabetes.
One element of the company's success, its corporate governance. Collins presides over 10 completely independent directors, including the lead director who acts as an ombudsman to the board.
In addition to me being the only insider on the board, even though I'm chairman of the board, I sit on no standing committees. I ask the executive committee and every other committee of the board to meet in executive session without me there, so if there's anything that they would like to discuss, they can.
Congratulations to Medtronic and Arthur Collins, our CEO of the week. Still ahead here, the latest on Annika Sorenstam at the Bank of America Colonial Golf Tournament in Texas. She's on the 17th, and we'll be heading right back after the break. Racing into history, one of the most celebrated champions in American racing. Driving in his final race this Sunday, Michael Andretti joins us. And your thoughts on Exporting America. We'll share some of your thoughts and emails when we continue. Stay with us.
Business Week Money Talks, the business news and consumer finance program. Information on how to earn, save, invest, and spend your money wisely. Now, from New York's Wall Street, Business Week Money Talks.
Coming up next, a company whose products are literally in its customers' hearts and minds. Medtronic, a leader in the healthcare services and equipment industry. The CEO, Art Collins, our leader of industry this week. But first, the leading mutual. Welcome back to Business Week Money Talks at the American Stock Exchange.
Well, this week's leader of industry heads up a company that was named to the Business Week 50. It is one of the country's leading medical device makers, producing new pacemakers, defibrillators, and spinal implant devices.
Art Collins has been CEO of Minneapolis-based Medtronic since 2001. He's worked at the company for 11 years after attending Wharton School of Business and Miami University of Ohio as an undergrad. Art Collins talks about the areas of strength going forward.
First, we'd like to position ourselves in large, untapped markets where patients that have a need for our products don't get them. We're going to invest heavily in research and development, annualizing right now in excess of $750 million, and continue to focus on areas that we're currently in that offer great potential, such as cardiac disorders, various cardiovascular disease, neurological disorders, diabetes, and the emerging treatment of spinal disorders.
Now, 70 million Americans don't have any health insurance. The healthcare industry is saying it's losing billions of dollars. Now, how can you, as a medical company, continue to grow in this environment?
Well, I think there will be impacts. There's no question. Anyone that believes that there won't be more pressure
on delivering more value for every dollar that is spent in healthcare is probably living on a different planet. But we feel that medical technology can be part of the solution rather than a problem.
Now, what is it like being a leader in today's times? You have a lot of different issues to deal with and a lot of demand from shareholders.
And by and large, what investors are looking for, what employees are looking for, what customers are looking for are straight talk. I mean, if you have an opportunity, talk about it. If you have a problem, talk about it. And I find that I spend an awful lot of my time outside of the office dealing with not only our employees, but scrubbing in and going into talking to our customers, surgeons, physicians, and the patients they serve. And I think staying close to that business and keeping your fingers on the pulse is extremely important because things move so quickly today.
And that's this week's Leader of Industry, CEO of Medtronic, Art Collins.
Yep, the company mentioned it has a lot of cash on hand, though it's not really looking around for acquisitions just yet, or at least that's the company line right now.
Yeah, well, the CEOs of other companies, I'm sure, are envious of that cash-rich position that they're in. Yeah.
Agreed.
Today we were talking about Medtronic.
She was so mean, wasn't she?
I don't know that Sybil Shepherd necessarily encapsulated mean. I think that Candace Bergen would have done a better job of mean.
That would have been
If you'd seen her in Miss Congeniality, she was definitely mean.
But she always seems a little bit wacky, Candace Bergen, in her roles now, doesn't she?
Yeah, Martha Stewart doesn't seem wacky to me at all.
Well, she's one said it, I didn't. Our stock of the day is Medtronic. It's a medical device maker. They had earnings last night, but the stock's not doing so hot, so I think that's worth a conversation. And
coming up in our next half hour, a Supreme Court ruling on drugs. We'll look at the impact on investors and consumers. Could cheaper prescriptions be in the pipeline?
And our stock of the day, Medtronic. It's close to its 52-week high. We'll talk to the head of the medical device maker when we come back.
Run the wall, maybe crash my... Still ahead on the money, gang. It was a strong quarter for a leading maker of medical devices.
When we come back, Medtronic is our stock of the day. We'll speak with the company's CEO. Stay with us. Medtronic, the world's largest maker of medical devices, posted net earnings of $487 million in the latest quarter. Now, that is a 62% increase over the same period last year. Sales rose 20%, topping $2 billion for the first time. Medtronic is our stock of the day. We'll speak with the company's CEO in a moment. But first, let's bring in our stocks editor, Joy Das, with more. Hi, Joy.
You got it, Allie. We're talking about Medtronic today. The company was founded in Minneapolis in 1949 and originally was a medical equipment repair outfit. The co-founders made history in 1957 by crafting the world's first external battery-powered cardiac pacemaker. It wasn't until the 1990s, though, that Medtronic actually sought to expand its position in the vascular market. In the 1990s, the purchase of Biomedicus made the company the world's top maker of centrifugal blood pumps. It also entered the lucrative cardiac defibrillator market in 1992. And to top it all off, in 1996, Medtronic entered the hot stent market through acquisitions. In fact, this acquisition strategy has really helped Medtronic to expand into a range of cardiovascular, neurosurgical, orthopedic surgery devices to offer hospitals cheaper and bundled products. Now, Medtronic's fourth quarter, the actual number was 40 cents versus 34 cents from a year ago. This is in line with expectations. Now, the company was helped by brisk sales of spinal products and devices to treat irregular heartbeats. Operating income rose 15%. Sales in the quarter topped the $2 billion mark for the very first time, rising almost 20%. But as you take a look at the chart on a 52-week basis, you can see that it's down on the guidance that Medtronic issued for the full year 2004 of $1.61. That's 3 pennies shy of the first call estimate. Guys?
Joy, stay with us for more on Medtronic. We bring in the company's CEO. Art Collins is with us. Welcome back to the program.
It's good to be with you today.
Look, the stock hit a 52-week high here with the trading yesterday. It's a good quarter with the improvement over a year ago. What's going right for the company, and where's there an opportunity for improvement?
Well, as you indicated in the lead-in, we had a very strong fourth quarter that capped off a very strong year. Revenues were up just about 20%, and very importantly, two of our most important businesses, cardiac rhythm management, which makes up about 48% of the total revenues, pacemakers and implantable defibrillators that treat a broad range of cardiac problems, and our spinal business, the fastest growing major segment that we have collectively. We're up over 25% for the year in the quarter, And very importantly, if you look at the last quarter's revenues in those two important businesses, 75% of the U.S. revenues were generated by products introduced in the last 2 years.
Well, let's talk about the different businesses you're in, and the cardiac rhythm management, which I guess is where your stents come in.
No, that's actually cardiovascular.
Okay, I'm sorry, that's okay, very good. We divide that differently. Your cardiac rhythm management business is your biggest single portion, though. That's 47% of your business. Where's your best growth, and where's your best, you've mentioned where your best growth is, where are your best margins?
Well, we have very strong margins within cardiac rhythm. Actually, spinal's strong. They're above the corporate average. Within cardiac rhythm, the major growth element in this last quarter, in fact, for the last several quarters, has been the implantable defibrillator line. This last quarter was up 42%. We have a strong stable of new products that have been introduced and coming, and some new indications that have broadened the reach for many patients.
Now, the newest area is this drug-eluting stent. I've been kind of following the development of stents, but that seems to be the next wave of products. Now, where do you stand on that? And I know that there's a dead heat to get this drug-eluting stent to market first, right?
Well, the first company that entered the market was Johnson & Johnson. They recently come into the U.S. market. We have a product that is in clinical trials, and we've just concluded one of those trial enrollments in Australia. We'll be starting the pivotal trial in Europe this summer. We expect to be in Europe in 2004 and probably in the marketplace in the United States in 2005. While that's important for a number of companies, U.S. stent sales only represent about 2% of total Medtronic revenue. So big upside, but not a critical component today.
You know, when we're talking about the pharmaceuticals, we're always getting into issues about who's got what in the pipeline, how far is it away. Do you face the same level of obstacles? Is the regulatory process somewhat easier to navigate when you're talking about devices, and to that end, what's in the pipeline and how far away is it?
Well, you got a number of questions. I'd say, first of all, contrast it to pharmaceuticals. Our product turnover is much more rapid than pharmaceuticals. You may get a new drug, it may be good for 17, 20 years. We have somewhere in the neighborhood about 2/3 of our total revenues come from products introduced within the last 2 years. So the ability to continue to apply technology to a whole host of medical problems is critical. Our pipeline is as full as it's ever been. We are investing at a running rate of about $750 million in research and development. We go through a regulated review at the FDA and other regulatory bodies similar to drugs, a different part, but we have to run clinical trials and go through the review just as a drug company would, only it's in a different part of the FDA.
That was a good answer to me, answer.
That was 11 questions. Well, here's one more for you then, on the same vein. You've had remarkable success on the acquisition front as opposed to organic growth. Where do you see the better growth coming from? You're investing a great deal in research, but are you still looking for acquisitions?
Actually, the growth has come from both areas, but the organic growth has been more important. The largest significant increase in our largest business has come from products we've developed ourselves. Products to treat congestive heart failure, sudden cardiac arrest. Now what we have done is supplement that with targeted acquisitions over the last 5 years. Today we find ourselves in the enviable position not having to acquire to meet our longer-term financial goals.
Now I imagine an aging population is also going to provide you with more opportunity as well, right?
Demographics are clearly in our favor because the majority of products we sell tend to be accessed by older individuals, and if you look at the percentage in the United States that's moving into that 60 and 65-year-old and older category, and elsewhere in the world, that bodes very well for the demographics in the future.
And I bet all the fast food that some folks are eating at this table.
Who's eating fast food?
Well.
I had a veggie burger.
You did have a veggie burger. That's impressive.
There you go.
Art, thanks for coming in. We
It's
appreciate
good to
it.
be with you again.
CEO of Medtronic.
Buds didn't find it impressive.
Thanks to our stocks editor, Joy Das, as well. And we'll be talking about Medtronic before we finish today.
It is one of the stock picks of our Talking Stocks guest today, Liz Miller. Find out what she's got to say about the company. In the next hour of Money Gang, she, of course, is going to be taking your calls and emails.
CNBC presents Squawk Box with Mark Haynes.
And in 10 minutes, they're one of the world's largest maker of implantable medical devices. Stock is near a 52-week high. We'll talk earnings with the CEO of Medtronic. Stay tuned. Up next, the stock of Medtronic, been a very steady performer for the past year. We'll talk about the next year with the company's CEO. And Medtronic says strong sales of spinal products and devices to treat irregular heartbeats helped the company meet analysts' expectations for the first quarter. The company earned an adjusted 40 cents a share in line with analysts' expectations. Revenues rose nearly 20% to $2.15 billion. Net income up 61%, $487 million. Stock, as you can see, been pretty steady, except for that drop along with the market back in the summertime. Been pretty steady up around the $50 level. So can the medical device maker pump profits into your portfolio? Joining us now in the studio, Arthur Collins, Chairman and CEO of Medtronic. Good morning, sir.
Good morning, Mark.
Good to see you again.
Good to see you.
The numbers continue to crank out. Your various lines all performing well?
By and large, we had, as you mentioned, a good year-end quarter, a good finish to the year. The growth was really driven by two of our largest businesses, our cardiac rhythm management business, which are pacemakers, implantable defibrillators to treat a broad range of cardiac problems, and the spinal business. Interesting, those two products, which comprise about 60% of Medtronic's revenues, have grown for the year and the quarter over 25%.
What do you make of comments from UBS Warburg, for example? ICD sales growth was slower than expected.
Slower than expected at 42%. Well, I'll take slower than expected growth at 42%. We're the world leaders in implantable defibrillators, and we ended on an uptick. As I said, I think the growth in a very robust market was very strong.
But it is slowing in the future at some point. I mean, what was last year? Something like 40, 50%?
Well, if you looked how we came through the last two quarters, we're up in the 50% range.
So we're going to go to 20 eventually, right?
Well, eventually. I mean, with the comparables, you can't continue to bring out 40, 50% growth. But as you know, Joe, this market is very underpenetrated. We've got somewhere in the neighborhood of only about 15% of those individuals in the United States that have a need for an implantable defibrillator are currently getting that.
We need an hour-long show because every time you come on, we have to go back and do all the background and explain this. But most people who need most people who need defibrillators don't survive the first incident that shows you the defibrillator. So there's all these studies that show that other people are good candidates, but they're in this environment they're so expensive that the real question is, how do you get Medicare and Medicaid to go along with something that's going to be so expensive, even though everyone else says it's a great thing to do?
Well, first of all, these are life-saving, and the devices have lives that run over a series of years. So we believe they're very cost-effective. In fact, there is a study that was recently conducted, not by our company, but one of the competitors, that very clearly indicates the benefit for individuals with respect to mortality. We do cost-benefit outcome studies as well as the clinical trials for medical efficacy, and they all speak. This is a very cost-effective therapy, Joe.
But wouldn't it double the number of people that should get one of these implantable devices if CMS backs what that study supports?
We believe that if CMS approves, it's an indication called the Made It 2 study.
Right.
It's for post-heart attack patients that have low ejection fractions or their heart can't pump enough blood.
Right.
If that's done, we think that will probably move the potential market up about double. That's
about
correct.
Double. And how much does one of these things cost?
Somewhere in the neighborhood of $20,000 to $25,000.
So that's just going to be something these guys are just going to think long and hard about.
Well, listen, CMS's expert panel was asked two questions after the FDA had approved it. All the medical associations had endorsed it, whether they should approve the indication. They came back, said the study was done correctly and the data was convincing. So we're hopeful if they make the decision on evidence-based medicine, there will be an approval.
Your stock price is selling right up at its high for the year, for the 12 months right now. You're 32 times next year's earnings?
About 30 going forward.
30 going forward. Long-term growth of Medtronic's earnings, now this is, I know Voodoo somewhere in here, 15% maybe plus. You fairly valued? I mean, we're going to continue with that earnings growth? You've got stents coming to market. You've got new products. How can you keep it up, and do you have a market share that's going to continue to grow?
Well, Michael, you got a lot of questions there. Let me see if I can tick off a
bunch of-
few
I
answers.
have a lot of questions, Joe.
I don't try to get into determine whether a stock is fairly valued or not. What I can tell you is that we're managing this business for the long term. We think the demographics are very good with aging, not only Americans, but others around the world that have a greater need for our products. We're investing heavily in research and development, running at about a $750 million rate. We've got a very good new product portfolio, and as Joe mentioned, not only in the implantable defibrillator business, but in diabetes, neurological, spinal, a whole host of gastrointestinal, neurological problems. These markets are not very penetrated. So we think we have a lot of potential.
For shareholders, we probably should ask you about, for your coated stent business, J&J is going to be first to market.
They're in the market.
Yeah, and that's important. We should probably at least let you go on record. When are you going to have a drug-coated stent in Europe, and when are you going to have one here? And then we'll have you back on and see if you hit these.
You bring us up every time I'm in here, Joe.
We got to know.
Yeah. We said we completed the enrollment for the first phase of clinicals in Australia. We'll start the pivotal this summer, early fall in Europe. We expect if things go as planned, and they're going as planned right now, probably in Europe in 2004, in the United States in 2005. We won't be the first to market, but when we come, we think we're going to have a very competitive product.
What's it worth being first to market in that stent business?
In this particular market, not a whole lot. If you look at historical market shares, they move very rapidly based on technology.
J&J had it and lost it.
Had it, lost it again. Guidant had it, lost it. We were up outside the United States #2 and about tied for #1 in the United States. So the good news is that if you're not in the market and you come with a very competitive product, you can gain market share back rapidly.
Well, if we did have an hour, we'd get into how medical devices and drugs are converging, and even in Barron's, that was one of the Brave New World areas that they were talking about. It's so exciting, some of the stuff you're doing, but it's not going to be
in spinal, for example.
Spinal and
the growth factors.
And, yeah, but these are all things that probably won't affect your income statement or bottom line for a while, so we can't really talk about it in this form. We should do like a show or something.
We'll come back and talk later, Joe.
All right.
It looks like the weak dollar has a very positive impact on your bottom line.
It has a very significant impact on the top line, and we hedge out in the future, Mark, so there is more of a dampened effect on, for example, this last quarter's earnings, but going forward, we think it's going to be positive after a long time of having it cut the other way.
Yeah. All right. Thank you very much. Appreciate it. Arthur Collins, Chairman and CEO of Medtronic.
Medtronic, the world's largest maker of pacemakers, saw profits soar 62% last quarter. Net income came into 40 cents a share versus 25 cents a year ago. Sales rose 20% over $20 billion. Stock right now actually trading lower, $2 million. Stock actually trading lower in the wake of that news. With me here in the studio, the company's chief executive and chairman, Art Collins. Mr. Collins, thanks for joining us. Do appreciate it.
Good to be with you, Brian.
For the first time, you issued 2004 guidance, $1.61. The street had $1.64, but I understand there's an extra week that may be thrown in there. Explain what that is and if you're going to make $1.64.
Well, first, let me talk about what our chief financial officer said during the conference call. We indicated that we've had in place for a long period of time a long-standing objective of a minimum of 15% top and bottom line growth over any 5-year period. If you take how we finished the year at $1.40, you simply multiply it times 15% increase, you get to $1.61. We indicated we were very comfortable at that level, and we felt we had upside to that because we have very strong momentum moving out of the year, as you saw, with 20% growth in revenues. And this year, we have an extra week. Several years ago, we went on a 52-week period, and then every 6 years, you pick up a 53rd week, and that will happen this coming year.
All right, so that's the interesting point. So, because the fund manager I spoke to that owns your shares saying that he was concerned, he thought, will that extra week push you to the $1.64 that Wall Street's got the consensus forecast on?
Well, we always try to deliver the most amount we can with investment in the long term, and we've invested at a rate of about $750 million in research and development, and we've got the strongest new product pipeline that we've had in years. So we feel very good about the future.
One thing else he wanted to know is ICD, I guess that's the defibrillator market, wants to know if you're going to regain market share, I guess, that you lost last quarter here. How's your market share gains for that market, and will you continue to take share away?
Sure. We're the world leaders in implantable cardioverter defibrillators. That business in this last quarter grew 42% in the United States. We've just introduced several new products. We are taking market share right now, and we would expect that would continue going forward.
Let's talk about Medicare reimbursement rates, obviously a big issue for any medical device maker because you want to get paid. How has that been? Has that been more of a struggle to get paid back for your devices, or are you seeing a little more of an ease up in the regulations that we're seeing for payback for your customers?
Well, we're in a continual discussion with the Center for Medicaid and Medicaid Services that really sets the coverage rates and the reimbursement rates for Medicare and Medicaid beneficiaries. Recently, they came out with a recommendation for in-hospital rates that had an average of about a 3.5% increase. Now, that varies by product. It's a constant discussion we have, and we feel that we'll continue to dialogue and hopefully get very adequate rates to cover the cost of care to Medicare and Medicaid beneficiaries.
One thing you have been doing with some of your extra cash is growing internally, growing your sales force. Is that a continued part of your strategy? You're going to continue to expand your sales force?
Selectively, yes. Not only have we invested heavily in research and development, but in particular businesses, we've added field force, whether it be customer support or sales representatives, and while we don't give out specific numbers, we did indicate that we've added in the range of 1,000 new field personnel in the last year.
Does a weaker dollar help or hurt you?
It helps us. We've picked up some additional benefit because of foreign currency exchange translation. It was about $86 million on the top line. Now, all of that didn't fall immediately to the bottom line because we hedge going out in the future. But by and large, a weaker dollar is beneficial to us.
We had a big deal. Zimmer Holdings were making an offer, I should say, not a firm deal, for a European-based medical device maker. Any more major acquisitions on your horizon this year?
We feel very good that because of the significant investment in research and development and several acquisitions that we had targeted over the last several years, we now participate in a very large number of attractive growth vehicles. And to hit our longer-term 15% top and bottom line growth, we've just reviewed that, and we think we can do that without any major acquisition.
Sounds like no more buyouts for 2003.
Well, we continue to look at a broad range of products, intellectual property, and technology, but we don't have to acquire to hit our growth rates.
Okay. Art Collins, Chairman and CEO of Medtronic, joining us on set. Do appreciate last time we talked here in Minnesota, I guess.
That's right.
Well, we'll see you again. Have a safe trip back.
All right, Brian.
Meanwhile, Medtronic, the world's biggest medical device maker, on the cutting edge of healthcare with new devices that would allow patients to skip operations like bone grafts and bypass surgery. Earnings up 62% in the latest quarter. Here's the guy right in the middle of that, Medtronic boss, the CEO, Art Collins. Mr. Collins, good to have you.
Good to be with you, Neil.
You know, I want to quickly get your reaction to this Supreme Court decision and how it affected, we know how it affected a lot of drug makers yesterday, and the notion that they could go for discount pricing on drugs. Any effect on some of the device makers like yourself?
No, not really. In fact, if you look at our pricing to Medicare and Medicaid beneficiaries, it's not all that much different than what we charge to other individuals. So while it's a very large issue for the pharmaceutical industry, it's not a particularly large issue for the medical device industry.
So all of a sudden, if a state like Maine or any other state that might get this idea wants group discounts on stents, who's to say that they can't get it?
Well, we're currently being reimbursed under Medicare and Medicaid, and we find that those reimbursements, by and large, are adequate. We can quibble with certain products, but it's not going to have a significant impact on medical devices as compared to pharmaceuticals.
You know, there are a large number of people who have a short position in your stock, in other words, hoping and praying that they can bash you down. And one of the arguments they use is that there are a number of drugs today that make stents and other devices you make totally unnecessary, and that's going to hurt you. What do you say?
Well, it's interesting, Neil, when medical devices have been compared to drug regimens, and one of our largest businesses, cardiac rhythm management, where we have pacemakers and implantable cardioverter defibrillators to treat a number of heart disorders, it's basically been proven that medical devices are superior to drugs alone. Sometimes they're common regimens. So we feel that the growth potential we have, not only in our base business of cardiac and cardiovascular care, but also in diabetes and neurological disorders and spinal, is very healthy going forward.
Bottom line is we're all getting older, and particularly the baby boomers. They're the ones who are graying, and they're the ones who need your stuff. And that's been kind of the wind at your back. I guess you expect that to outweigh what's been happening on the downside.
Well, you're absolutely right. If you look at the demographics, not only here in the United States, but in many developed countries in the world, there is a larger percentage of the population that's moving into that 60 and 65-year-old and older category. And those individuals tend to access our products more than younger people. It's a trend that's been underway. You see the baby boomers now moving into that older position that have greater cardiovascular problems. And so we think this bodes well in the future for our products.
Art Collins, thank you. And Art, I appreciate your juggling with all the breaking news we've had today.
Sure, Neil.
Thank you very much. Art Collins, the man who runs Medtronic.
Up next, what does Medtronic have planned to help save your life and maybe your portfolio? We'll talk to the CEO, but he'll join us right after this break to talk about profits and the company's prognosis. Later, we're living rich with the judge. That was a shot of Rockefeller Plaza in Rockefeller Center, where they are now setting up the Christmas tree. Medtronic meets analyst estimates and announces the acquisition of Vertilink Corporation, maker of spinal fixation devices. Company reported 39 cents a share, in line with expectations. Revenues jumped 14%, $2.1 billion. Net income up 57% to $478 million. It says there 476. Company also is repurchasing 30 million shares of its common stock. Stock has a high of around 53 or so. The low is down around 42, and it is currently down in that lower end of the range, but up $1.50 today. Sharp jump on Monday after news that its defibrillators reduced the death in heart failure patients without major artery blockage. So let's talk about the news. Joining us now from Minneapolis, first on CNBC, is Art Collins. He is CEO of Medtronic. Good morning, sir. Thanks for being with us.
Good morning, Mark.
So, still firing on all cylinders.
Yeah, it was a very solid quarter. I think when you look at the various components of Medtronic, probably the most interesting were the progress we've made in implantable cardioverter defibrillators. That business was up 22%. Our spinal business continued to do very well, up 29%, and the diabetes business that was having some problems the last few quarters had a turnaround and was up 18%.
So what's the next challenge?
Well, we continue to invest heavily in research and development, so the new product pipeline looks very, very good. The challenge we have is continuing to roll those new products out and ensure that the patients that have a need for them continue to get access. Clinical trials are very important. You alluded to one at the beginning, and we've got another significant clinical trial for implantable defibrillators that should be presented at the American College of Cardiology meeting in March of next year.
What part of your business is physio control, which is a spot where revenues were down?
That's right. Physio control is in what we call our cardiac rhythm management business. Physio control is in the business of manufacturing and selling external defibrillators, both those used in hospitals as well as the automatic external defibrillators.
And that is that surprises me. I know, for example, I'm on the board of directors of some athletic groups, and we order these things. You know, I'm surprised that that's not doing better.
Yeah, we were surprised too. It was down quarter over quarter. It actually grew fairly nicely sequentially. And there was a study that was presented earlier this week at the American Heart Association on public access defibrillation that was very positive. So as the board of directors that you're on and a number of others, we expect to see automatic external defibrillators expand in usage in a number of locations.
Yeah. What about vascular, posting quarterly revenues $194 million? Your press release is a little vague. It says with growth up slightly versus the same period 1 year ago.
Yeah.
Does that mean absolute growth or rate of growth?
No, that was, well, actually, the business was up very slightly in terms of absolute growth.
Okay.
That business has been down in recent quarters, partly because we had to come off the U.S. market in a coronary stent. There's a lot of attention. I've talked with you and with Joe on this in the past on drug-coated stents. We're making very good progress, but that business will underperform the corporate average probably for at least the next year or so until we get into the drug-coated stent market, which we intend to do.
Mr. Collins, this is Joe Kerner. We were just David and I, Faber, were just talking, and an interesting point. Let's say that we finally are able to use statins to prevent the atherosclerosis, or to prevent hardening of the arteries. How much of your cardiac rhythm management business, your key business, how much of those problems that people have are caused by that? And what if we actually are able to prevent it from happening? Would that really hurt your business, your ICD business, or are those rhythm management, is that due to some other cause?
If you really could solve coronary artery disease, the largest impact would be on the use of catheters in angioplasty. Much of the cardiac rhythm management business is really addressing an electrical problem in the heart.
That's not due to what we think of as heart disease.
Well, there may be contributing factors, but the largest impact would be on traditional angioplasty or a coronary bypass surgery.
All right. The St. Jude study that was out earlier this week that showed that just missed statistical significance in terms of whether someone that had heart failure for a cause other than the conventional heart disease. Was that disappointing, or was that positive for ICD growth?
Actually, the medical scientific reaction to the study was positive in the sense that the study I alluded to earlier that's coming out in March, and it's called SCUDHEF, which is a study that tracks the mortality benefits of implantable defibrillators in heart failure patients, has a subset that this study that came out earlier this week looked at. Now, most of the scientists and clinicians that have looked at this think that study, which was not powered with as many patients or ran as long as the study that will come out in March, they believe that this bodes well for a positive indication. And if that study, SCUDHEF, is positive, it could almost double the number of patients indicated for an ICD.
Mr. Collins, this is Todd Buchholz. I noticed in your revenues for your Infuse line seem to be going very nicely. Is this the bone graft procedure that all of my baby boomer friends have when they injure a vertebrae, pinch a nerve? Because it seems to me the three alternatives there are: number one, you tough it out; number two, you turn into Rush Limbaugh and take a lot of painkillers; or number three, you have the surgery. Is this the technique that you folks are invested in?
Yes, Todd, the Infuse product is in fact the bone growth factor. It is used in spinal fusion when you have a disc removed and you have to fuse the vertebrae. Prior to using this product, what you would have is a second surgery to harvest bone from your hip, which would go into a tiny cylindrical cage that would then go between the vertebrae and would grow bone. Now you don't have to have that second surgery. You just squirt a little of this growth factor on a collagen sponge and it grows bone just as effectively as if it was your own.
Hey, Mr. Collins, just real quick, we hear every day about reimportation, and you know, your medical devices, not drugs, but these are really expensive little things that you sell. Does it bother you the way it seems like the country is headed in terms of, I mean, that's just importing Canada's price controls, as if we reimport you know, the drugs. Do you worry eventually you're going to be hurt by just pressures to keep costs down?
Well, we always are conscious of the need to get better value for every dollar that's spent, whether it's in the United States or elsewhere. Our products are a little different than pharmaceuticals in that many of our products are used in surgical procedures where our people have to be present in order to support the physician. It's not simply writing a script and taking a pill, but we watch very carefully what is going on north of the border, and
And we have been in discussions with the FDA regarding the whole question of importation or reimportation. But it's not as much of a factor for the medical device and technology industry as it is for pharmaceuticals.
I take it from that your prices are lower in Canada?
It depends on the product, Mark. Some prices are relatively comparable, some are slightly lower, and it also depends on how big the account is that we're selling to.
All right, thank you very much, sir. Appreciate your time.
Good to be with you.
Art Collins is CEO of Medtronic.
And welcome back to Bloomberg on the Markets, live from New York City. I'm Mike Schneider.
And I'm Carol Masser.
In a couple of moments, going to be talking to the CEO at Medtronic for you in a couple of moments.
Taking a break here, folks, but still ahead, Medtronic's earnings came in higher than expected.
The CEO, Art Collins, joining us next. Coming right back.
Welcome back, everyone. Medtronic, the world's largest maker of devices that regulate heartbeats, has reported stronger earnings than expected. Net income at the company rose 17%, revenue jumped 24%. And joining us now to discuss that performance and what's next for the company is Medtronic's Chief Executive Officer. He is Art Collins. Morning, Art. Nice to have you back with us.
Good to be with you, Carol.
So what was the big driver of earnings growth and revenue growth in the past quarter?
Well, this was the strongest revenue growth that we've had in 4 years, and it was balanced across all our major businesses. Probably the one area that was the greatest surprise, at least externally, was the growth in our implantable defibrillator business. And this was up 34%, showed good strength in the market, and we also took market share.
Why do you think that number, 34% in terms of growth, surprised externally?
Well, most people, I think, were expecting the market was going to grow somewhere in the neighborhood of 20 to low 20s. It actually came in a little higher than that. And I think individuals that were tracking the performance, at least last quarter, didn't think that we'd take as much market share as we actually did.
And let's talk market share. I mean, you play into a lot of markets, defibrillators, pacemakers, spinal devices, units that make spinal devices. What kind of market share increases are you seeing in your various markets that you play into?
Well, during this last quarter, we saw several percentage point share increases almost across the board, with the exception of one business. And this was driven by a very strong new product pipeline, as well as investments that we've made in our sales marketing area. And so all of this is now coming together, and we think bodes very well for momentum going forward.
What was the weak spot?
The only business that was really down was our coronary stent business in the United States, and that represents only about 1% of total Medtronic revenues. Every other business was up, and the major business categories, including vascular, were all up over 15%.
Now, I know a weak dollar also helped you out during the last quarter. How key was that to your earnings?
Well, it was important in terms of driving some of the revenue growth. We had in excess of $100 million that picked up simply because of currency gain on the top line. But because we had hedged previously, we did not pick up any gain on the bottom line, and we think that will turn around going forward.
Okay, so let's go forward. What's the outlook? I know the Street has you pegged at 43 cents for the current quarter, $1.62 for the year overall. Feel pretty comfortable with those numbers?
Well, what we said last night during the call, if you take this year's earnings per share and you net out any one-time charges, it was at $1.63 on our fiscal year. And we estimated that we should be able to achieve our long-term financial objective of a minimum of 15% growth. That would bring us in at about 187 for the fiscal year coming.
Safe to say that you're upbeat about the next year?
Very upbeat. And in fact, as I mentioned earlier, we've got the strongest new product pipeline that I can remember in years, and these investments in the field are now starting to pay off.
Just quickly, and I just want to draw our viewers into a chart I've got up here on the terminal. Why is it, though, then, that is a chart over the past year of the Supercomposite Healthcare Equipment Index? That's the red line. That's the upper line. Your stock is the white line. Your stock over the past year down about 4%. The group overall, though, up about 26%. What is it that you think investors in Wall Street's missing here?
Well, if you go back in time, we actually were trading well above the composite, and I think there was a period of time when we actually grew into the multiple. And right now we feel very well poised for growth going forward. And I think the markets we're in are healthy, and we hold a #1 position in almost every market.
So upbeat, to say the least.
Upbeat.
Okay, good to leave it there. Art, it's always nice to have you with us.
Good to be with you, Carol.
Art Collins, their CEO of Medtronic.
We'll also talk to Medtronic CEO Art Collins. Medtronic sales topping $2.5 billion in its latest quarter. Profits rose 20%. And a new study says Google may not be any better business at Medtronic, really pumping, excuse the pun. Strong sales across all of its product lines push profits up nearly 20%, and sales of Medtronic's implantable cardiac defibrillators shot up some 34% after a study showed they significantly reduced deaths in patients with even mild heart disease. Joining us now is Medtronic CEO Art Collins. Good to have you on the program.
Good to be back, Rhonda.
Well, you're in an area of business which we know, thanks to the aging population, is a growth area. And it's an interesting area in the sense, too, where a lot of other competitors have noticed it's a growth area and want to participate. I know with your company there's a lot of interest in drug-coated stents. Tell us where you are with that.
Well, we have a drug-coated stent called Endeavor. We will be presenting later today in Paris some information on our first in-man study. We have also enrolled the pivotal study, which will be used for U.S. approval. And assuming we stay on our timelines, and we have no expectation not to, that we will be launching our first drug-coated stent in Europe at the end of this calendar year and around the end of next calendar year in the United States.
Can't we just pretend we're in Paris now and find out what the study's about? We'll serve you some wine and cheese. Will that work?
No, that won't work, but stand by, and in a short period of time you'll find out.
Mr. Collins, are you concerned at all that down the road we might see pushback efforts on price increases such as we've seen in the drug side of the business?
Well, we are constantly upgrading our product line. If we would be selling the same types of products, and we do have some that have been around for a period of time, there's a lot of price pressure on that. But the whole focus is to try to bring out new products that not only have better medical outcomes, but also more cost-effective outcomes. And in fact, we estimate that right now about 2/3 of our revenues that we just generated in this last quarter came from products that have been introduced within the last 2 years. So this is a constant role in technology, again, focused at better medical outcomes and more cost-effective care.
What's the biggest hurdle to your business right now?
Well, probably the biggest hurdle is continuing to ensure that the patients that have a need for our product ultimately have access. We operate in a number of very, very large markets that are underpenetrated. As you indicated on your lead-in, one of the significant growth areas was in our implantable defibrillator business, up 34%. And even though a significant new study came out that definitely proved that in heart failure patients, implantable defibrillators had a 23% improvement in mortality, that market is still less than 20% penetrated. So it's continuing to get the word out not only to the physicians that perform the procedure, but also the referring physicians and the patients themselves.
Now, the weaker value of the dollar had been a factor helping you earlier. Is the strengthening going to be an impediment going forward now?
Well, in terms of revenues, it certainly helped the revenues, but we had hedged well into the future, and we got no bottom line benefit during this last year. In fact, as we move through this new year, we think we will get improvement on the bottom line because those hedges that we were obtaining losses on now will be behind us.
I was actually reading an article in Minnesota, which is where you're based, about your hopes to expand and add some 2,000 jobs. That's a fairly significant number.
Right now, Medtronic has approximately 30,000 employees worldwide, and we expect that over the next year we'll add at least 1,000. We would expect to continue to add as the business grows. It's one of the nice parts about growth. You need individuals that not only will make products, we continue to invest in research and development, spending about $1 billion next year, and also we upgrade and extend our manufacturing capability.
Art Collins, wish we had more time. CEO of Medtronic, we know that you're on your way to an analyst meeting. We appreciate your time here. You wouldn't play that we were in Paris, though, but that's okay.
Next time.
Good to see you. Thanks for swinging by New York.
Good to be with
Appreciate
you,
it.
Rhonda.
Our guest host is Lynn Reeser, Chief.
Coming up, keeping pace with Medtronic, CEO joins us to talk profits and where the company goes from here. But Joe's tracking that Genworth IPO, and we're going to talk about that next. And, donuts.
Stanley, it's one guy. Medtronic, and who's the other?
Smith Barney. Also very
Smith Barney
affirmative,
also.
yeah.
All right. Medtronic, we're going to talk to Art Collins in a second. This is interesting today because people say, and I'm reading from, I wish I had a better firm as far as some comments, but this is the one I just picked quickly. Piper Jaffray. Medtronic is
The mothership. My mothership.
No, this is a good. I'm kidding. Medtronic has gained a reputation of late for just meeting published expectations. For this fourth quarter, not only did Medtronic come in ahead of consensus, but also exceeded the whisper expectations. So revenues at 2.665 were 8% higher than consensus, 48 cents a share above consensus of 46. Art Collins, he couldn't wait to get in here today. He was here. He was here at 4 in the morning.
You bet.
Did you see him? I mean, he's so excited about coming on, and that's a way you can tell if a guy really wants to come on that they've got some good news to share. Novell, 3-cent operating number, in line, but analysts are calling it mixed. It was down about 6.
Up next, Medtronic beats the street. We'll go over the numbers and look at the company's guidance with the CEO, plus later on Squawk Box. Oil prices still up there. We're back. Medtronic, the maker of defibrillators, pacemakers, beat the street. Company reported EPS 48 cents a share. Estimates were 46. Net income up 16.79%. Why not carry it out to 3 or 4 decimal places? To $568.9324 million. Revenues up 24% to $2.7 billion. Stock has been in a trading range, 42 to 52 over the last year or so. Currently trading around 48, toward the top end of that range. Joining us first on CNBC to discuss business is Art Collins. He is CEO of Medtronic. Good morning, sir.
Good morning, Mark.
Good to see you again.
Good to see you.
First of all, let's compare apples to apples. There was an extra week last year or this year?
This year.
Okay, and how did that affect things?
Well, we'll never know for sure because we have to go through one full cycle, but we estimate the maximum that it impacted was about 5%. Internally, we debated between 2 and 5%. However you look at it, it was an extremely strong quarter across the board.
All right. Strength in all areas? ICDs, spinal, diabetes, the whole thing?
All areas. This was the first time that all of our major businesses exceeded the long-term expected growth rate of a minimum of 15%, and it was the highest growth rate that we've had in 4 years.
The ICD market, though, is that slowing down?
No, as a matter of fact, just the contrary. It's actually picking up. There have been a number of factors that have influenced it, but this quarter we actually saw a pickup in the market, and on top of that, we took market share, which puts us in an even stronger leadership position.
And where do we stand with the drug-eluting stents? Endeavor 1, I think is what you call it.
Endeavor 1 was the first in-man study. There'll be 12-month data that will be presented later today in Paris, and we have our new
Paris?
In Paris. There's a course on revascularization that takes place each year in Paris, and data will be presented as we mentioned during the call last night. We believe that the Endeavor stent is on track for meeting its expected launch dates in Europe at the end of this year and at the end of the next calendar year in the United States.
Collins, how often do you introduce a new next generation ICD?
Well, this year, actually, Mark, we're going to be introducing over the next 6 months, excuse me, Joe, yeah. Mark. Joe, over the next 6 months, we're going to introduce 4 new ICDs.
And it's amazing how quickly the technology advances. So how does a doctor know? You said you took market share away from either, I guess, Guidant or St. Jude.
Both.
From both. Because of what feature on your most recent ICD caused doctors to prescribe yours instead of theirs? Was it smaller, faster, more data, what?
Well, all of those things. In fact, the algorithms that are coming out now, in addition to the device being smaller and lasting longer, it's able to discriminate between arrhythmias much better in the past. In fact, one of the new products that will be coming out this fall, in addition to providing better therapy, actually can monitor the buildup of fluid in the lungs for heart failure patients, and in so doing, you can identify whether a patient is starting to deteriorate before they have to go in the hospital, which is not only good medicine, but very cost-effective.
It's amazing. And does a doctor have to go to the patient to see the readout, or have you gotten to the point where it's wireless now and it can actually be, the doctor can see it in his office?
Well, that's one of the other very important parts of this therapy. In fact, the Heart Rhythm Society of America had their big convention in San Francisco last week, and the busiest part of the whole convention was looking at our remote monitoring capability. It's called the CareLink system. And what it allows physicians to do is to have pacemakers and ICDs remotely monitored, and that information can be sent via a modem to a secure server and reviewed in a remote location. Again, better medicine for the patient and more cost effective.
Who's in the lead in the congestive heart failure area now?
Medtronic.
And did that help these results here? Someone got delayed again, didn't they? Who's trying to get one of those on the market? St. Jude?
St. Jude.
St. Jude, and they
Theirs
still
was
don't
delayed.
have one. And
Yeah.
it's delayed again. So you're the one that, is that helping the bottom line?
Definitely. In fact, there was a major study that was presented at the American College of Cardiology meeting in March, and this study really looked at heart failure patients in moderately severe to severe heart failure, and what it did was look at various arms of the study. One arm got ICDs, another arm got amiodarone, and another arm was a placebo, all getting good medical therapy with beta blockers, ACE inhibitors. And what this study showed is the arm with ICDs had a 23% improvement in mortality. And that's fueling some of the growth, and we expect that to continue as we move through this year.
You guys are in Minneapolis. That's why I read that Piper report. You got a lot to talk about, right?
I have a question.
You guys play golf
Sure.
together, right?
Yeah.
Joe, I don't have time to play.
Yeah, exactly.
He's working, I'm working. In terms of the spine business, has been one of your most successful acquisitions with Sophomore Danek. Growth in the quarter was over 30%. Over the next several quarters, where do you see growth, and how does that contribute to earnings?
Actually, growth this quarter in the spine business was over 35%, and we've had something like close to 5 years of 20+% growth. There's not any single factor that's driving the spine growth. In addition to coming out with new spinal constructs that are used in the cervical and thoracolumbar area of the spine, well, one of the fastest growing portions is the use of a growth factor. It's a recombinant human bone morphogenic protein that is used in conjunction with our spinal cages for spinal fusion. And what this does is obviate the need for a second surgery to harvest bone from the hip to put in this small cylindrical cage when you have a fusion. We're coming up with much less invasive ways to perform spine surgery, and on the horizon are a whole series of new artificial discs that will allow in the cervical area and the thoracolumbar area to maintain motion going forward.
Who makes the growth factor for you?
We get that from Genetics Institute. It was
From GI, yeah.
That's right. That's right. And we did
Someone
all
bought them eventually, right?
Right.
Who bought GI finally?
Merrill Lynch research speaks to this infused technology.
That's correct, Mark.
Says orthopedics is one of the few businesses with a margin profile that rivals Medtronic's cardiology profit profile, and then goes on to say, moreover, competitive bone morphogenic programs from Stryker and J&J are in development. Thus, Medtronic needs to move to quickly to fully capitalize your early regulatory lead. They suggest some sort of acquisition in this area might be good for you. What do you think?
Well, first on the growth factors, the FDA just recently approved a new indication for our infused product. Previously, it was indicated only for spinal fusions. Recently, we have approval now for infused to be used in acute tibial fractures. So we're seeing an expanded use. We continue to look at various applications beyond spine, but we in orthopedics right now feel we are in the most attractive part of the orthopedic market, and that is the spinal portion. We'll continue to look at various applications in orthopedics, but we feel very good with our positioning right now.
All right, we have to leave it there. We thank you very much for coming in.
Thank you, Mark.
Appreciate it. Art Collins is CEO of Medtronic. We're back. Medtronic has both the customers and investors' hearts in mind. The leading manufacturer of defibrillators and pacemakers reported earnings met Wall Street expectations, but says slowing defibrillator growth dampened revenues. The company reported and adjusted 40 cents a share in line with expectations. Revenues grew about 15% to $2.2 billion. Net income up 8.5% to $464 million. Stock has been trading in a range between 42 and 52 over the past 52 weeks. You can see there at the extreme right-hand side, the peak followed by, the peak is up to around what, 51, and then a big sell-off on a warning. This morning the company announced it has received conditional approval from the FDA to begin its Endeavor 3 clinical trial, third clinical trial in a series of studies to support global product approval of its drug-eluting coronary stent. Joining us first on CNBC from Minneapolis is Art Collins, CEO of Medtronic. Good morning, sir. Thanks for being with us.
Good morning, Mark.
Well, you know the first question. The first question is what's going on with ICDs?
Well, first of all, we were up 17% in the quarter on our ICD business. That was a little bit shy of expectations, but very close. We have said that we believe this market should grow approximately 20% in the future. You may see variations quarter to quarter. In fact, in the same quarter a year ago, our revenues and the market in this segment jumped about 60%. So it was a tough comparison. We did announce we've got a number of new products coming out, approximately 6 new products, ICDs, in the next 12 months. We've got a significant study that will be coming out at the American College of Cardiology that, if possible, could be another major impetus for growth. So on balance, we're feeling very good about this market.
You know, I'm curious to, well, let me ask this briefly. According to some research I read, they say ICD market model looks for 20% of the growth, 20% growth worldwide market in the calendar fourth quarter. Guidant and St. Jude, we know that these ICD makers saw 30% and 25% growth, but it doesn't say that that's the growth in ICDs. Are you, let me put it to you bluntly, are you taking share, maintaining share, or losing share in ICDs?
In the last quarter, we maintained share. We're the world leader. We had 49% share in the quarter we just finished. It was 49% in the quarter before. While we maintained share and we maintained the leadership, I was disappointed that we didn't increase share. We've expanded our sales force. They're now just starting to come into a much more productive route. And as I said, we have this stable of new products coming. So we have objectives to increase share going forward.
In recent Morgan Stanley research, there was a survey of 35 centers that use your products. And interestingly, when they talked about the ranking of features for traditional ICDs, reasons for using one over the other, some pretty simple things were at the top, like size and weight.
Mm-hmm.
Kind of makes you wonder why you spend a lot of money on R&D to make it more sophisticated if they're basing their decision on how big it is.
Well, they're not simply basing it on how big it is and how much it weighs. That's a consideration because obviously it sits inside the body. But the ability to have appropriate algorithms to determine when the ICD should shock and when it shouldn't is very important. Another emerging factor is the ability to monitor these devices remotely. And we announced at the earnings release conference call that we now have our CareLink system, which is a remote monitoring system that can monitor ICDs in over 100 clinics in the United States, and we're now monitoring in excess of 6,000 patients. I think that's going to be a much more important feature going forward.
Mr. Collins, this is Neil Hennessy. I was just wondering, out of your 5 major business sections that you have, or segments, which one do you think has the best growth potential going forward and why?
Well, if you look at the historical growth and also going forward, in the near term, we believe the spinal business, which grew in excess of 30% and has a whole series of new products that have been rolled out and will be rolling out, is going to continue to significantly exceed the corporate average. We also believe that within the cardiac rhythm management business, these are pacemakers and implantable cardioverter defibrillators, the ICDs. We think the ICD market has got an opportunity again to grow somewhere in the 20% range. One interesting change that took place, it was a reversal. The first time in 10 quarters that our vascular business that grew 16% outpaced our expected average of 15%. And at the lead-in, you indicated after we released earnings and after we had the conference call, we got some very good news from the FDA where our Endeavor 3 confirmatory clinical trial has been approved, and we'll be starting that soon. And so we're still on target for drug-eluting stents to launch in Europe at the end of this calendar year and in the United States at the end of 2005, right. and that should spur growth.
Yeah, you're third to market there, Mr. Collins, but that obviously better late than never. But what is the key date for the huge trial that's been sponsored to try and expand the ICD market? I don't know how many people are involved, but that's a real issue here, is whether you finally get reimbursement for 500,000 more people
that could use these devices. What's D-Day on that? Isn't it coming up in March?
It is. The trial we're referring to is, the acronym is SCUDHEF. It is measuring the effectiveness of ICDs in heart failure patients. The date is March 8th. It will be presented at the American College of Cardiology in the late-breaking trials. The trial is powered very strongly. There are 2,500 patients. It's run for 2.5 years. It is able to be looked at not only in totality, but a number of subsegments. And this is probably the most eagerly awaited clinical trial that we've seen in a long time.
If it comes out positive, do you expect the CMS to expand the patient population for available for reimbursement for these ICDs? That's number one. And number two, if that does happen, how would you raise that 20% number in terms of how this market could grow?
Well, to answer your first question, if the data is positive, I would certainly expect the Center for Medicare and Medicaid Services to reimburse. We have been in discussions with the center, keeping them up to date on the status of the trial, although we don't know the results, but they understand the device. This is a device that is already reimbursed for a number of indications, so I would expect reimbursement. With respect to the growth rate going forward, we have indicated that we think this market is very underpenetrated now. It's only about 20% penetrated. You indicated in your question that if it is positive in totality, and it could be positive in totality or in individual segments, but if it is positive in totality, it could add another 500,000 to 600,000 and bring the number of people that are indicated to approximately 1.2 million, which would add additional growth.
Well, what would it be, 30% a year? What would it be?
We've said long term, we think that somewhere in the neighborhood of 20%. My guess is that if the SCUDHEF trial was positive, we'd probably move that number up.
Okay, sounds like we pushed it a little beyond the quarters in the meter, lost the satellite. We apologize.
We're never going to know what that number is.
We apologize to you and to Mr. Collins. We were talking with Art Collins, the CEO of Medtronic. Coming up, GlaxoSmithKline out with news is sending the stock lower. The sales launch from CNBC World's Alison Morris in Paris. Then is the Michael Eisner. Here's a check on what's happening this morning. Disney chief Michael Eisner will face financial analysts during day 2 of the company's investor conference. The heat is rising for Eisner a day after Comcast launched a hostile takeover bid. Fund advisor Institutional Shareholder Services is telling clients to vote against his re-election to Disney's board. U.S. health insurer Aetna says profits rose in the fourth quarter as premiums outpaced medical costs, both revenue and medical.
Watching Squawk Box on the world leader in business news, CNBC.
Shares of Medtronic under pressure this morning after the company missed Wall Street forecasts and said full-year earnings would fall 3 cents short of the consensus estimate of $1.90. The company reported an adjusted 44 cents a share, missing estimates by a penny. Revenues up 11% to $2.4 billion. Joining us first on CNBC to discuss results, give us an outlook, Art Collins is CEO of Medtronic. Good morning, sir. Thanks for being with us.
Good morning, Mark.
What the heck is going on here?
Well, we came in a little shy of our expectations and the street expectations. We missed by a penny. If you look at the first half of the year, our earnings per share is up 16%, net earnings up 15%. It was a miss by a penny, but during the quarter there were a lot of very favorable events that took place that make us feel good for the remainder of the year.
But you did produce an outlook that was shy of what analysts had expected as well.
What we did is our expectations in the second half of the year haven't changed. What we talked about last night on the earnings call, if you look at the full year, the range is now bracket of 15% growth in earnings per share, and we said that we're comfortable in that range.
Mr. Collins, this is Roger McNamee.
Yes, Roger.
Looking back historically, you guys have had a mix of growth from internal organic products that you already have and things you've acquired. Can you talk a little bit about how you expect that split to drive your revenues going forward, particularly the extent to which you're going to have to go outside to get new product?
Roger, when we plan, whether it's on a 1-year or 5-year basis, which we do on an annualized basis, we look at our growth without any major acquisitions. we feel very fortunate that we're currently participating in some very large underpenetrated markets. So at the present time, we feel that growth will be driven by internal new product development, market expansion, without the need to go out and acquire.
And what kind of growth rate would that be?
We've targeted over any 5-year period a minimum of 15% growth, and we're sticking with those estimates.
Mr. Collins, how you doing? Joe Kernan.
Hi, Joe.
Good to see you. In the quarter, ICD growth rate 17%. The previous quarter 31%. That's what everyone's talking about. I heard that's what was on the conference call, and that some of your executives got tired of talking about. They got tired of answering questions about that. It's the St. Jude congestive device, I guess, that caused the competition. When is your new smaller device going to be ready? And do you expect that to, to take over or regain the market share?
Well, first of all, the growth in our implantable defibrillator business was 17%. We had been targeting and talked to the street that if you look forward, we think that market is probably about a 20% plus growth market going forward. We introduced a new product, our second new defibrillator, more than halfway through the quarter, and we just recently have received FDA approval for a new product that is unique in the market. It's called Sentry, and we think it will be the most competitive product available. It's an implantable defibrillator that also resynchronizes the heart for heart failure patients, and it's the first time that a device has had a monitoring capability for edema, or the buildup of fluid in the lungs, which is a precursor to decompensation and heart failure, which is bad for the patient and expensive. We'll launch that product this quarter. There was trialing of the St. Jude product, but we feel very confident that as we move through the remainder of this fiscal year, we'll be in a position of increasing share. One last point, Joe, on the market. Very good news is that we've talked about this before. The major heart failure study called SCUDHEF, which looked at the use of implantable defibrillators in heart failure patients, that was released in the spring of last year, now has a preliminary ruling out from the Center for Medicaid and Medicare Services for reimbursement that should take place at the beginning of the new calendar year. That will also spur growth in the market because this market is only about 10% penetrated.
And it's everything you hoped for, what the CMS is deciding on?
Well, there's some aspects of the ruling. They've talked about a registry going forward, which this has been a very complete study. We're not necessarily in complete agreement that one is needed, but we will certainly comply with whatever they wish. There were a few other aspects of the ruling that one could take a little exception with, but by and large, I think it was a very, very good ruling and very important for the industry, Medtronic, but most importantly for the patients that suffer from heart failure.
All right, sir, we have to leave it there. Thank you very much for bringing us up to date.
Okay, thanks, Mark.
Art Collins, CEO of Medtronic, up next on Squawk Box.
We're back at 47 minutes after. Medtronic earnings rose 17% last quarter on higher sales of heart defibrillators. Now, last month, the company, along with competitors St. Jude and Guidant, won expanded coverage for the devices under Medicare. With us here in the studio to discuss Medtronic's performance and prospects is the company's chief executive. He is Art Collins. Good morning, Art. Good to have you with us.
Good to be with you, Carol.
So what was the biggest driver of earnings in the last quarter?
Well, we had two significant impactors. The two largest product lines are implantable defibrillator business and our spinal business, that collectively represent about 42% of the company. We're up 26% and 24% respectively.
Are you anticipating that kind of continuation in terms of growth going forward?
Well, we've said for some period of time that we think the underlying market growth for the implantable defibrillators will be strong, somewhere in the range of 20%. And we actually, this last quarter, gained market share. And with the new product pipeline that we have, with the expanded patient management, we continue to look forward to good results.
Now, with the ICDs, the defibrillators, some analysts, they call that certainly your growth engine in terms of your business, but some of them say that you need to actually make an acquisition to ensure that kind of growth that you're talking about going forward. Will you need to make an acquisition to do that?
Well, one of the very fortunate aspects of our business is we operate in a very large number of underpenetrated markets, not just the heart failure market and the sudden cardiac arrest market that the ICDs address, but also in diabetes, neurological, spine, urological, and gastrointestinal. So we don't need to make an acquisition to continue to grow because many of these
markets are underpenetrated. That's not to say that we won't acquire products or technology or intellectual property or potentially companies, but we're well positioned on internal growth.
Okay, and at this point you're not looking at an acquisition, at least in this area?
We always continue to look at potential acquisitions, as I said, of not only companies but technology, but the important point to remember is that we have good fundamental businesses right now.
Art, you certainly have some sales overseas. I know most of your sales are here still in the U.S., but what about currency impact? How big a deal was that for you guys during the quarter?
Well, it impacted the top line by about $59 million, and that was on a base of over $2.5 billion. We hedge going out in the future, so the impact on the bottom line was not quite as great. About a third of our business is outside the United States.
I do also want to ask you about developments that you think investors should be watching for in this quarter, and I bring that up because Endeavor, your drug-coated stent, you were supposed to release some information in March, and I'm curious if you're getting any early indication of how that's going and what maybe investors can expect on that front.
Well, there's a tremendous amount of anticipation concerning our drug-coated stent, the Endeavor. We will be releasing in late-breaking trials at the American College of Cardiology meeting that will take place on March 6th, the results of our Endeavor 2 study. And this is eagerly anticipated. And unfortunately, because you have to hold that information for that late-breaking trial, I can't discuss it.
Can you catch up, though, with some of your rivals who already have products out in the market? I think of J&J and Boston Scientific.
Well, J&J and Boston Scientific are in the market. The one thing about the interventional vascular market and coronary stents is market shares tend to shift very rapidly. So if we come in with a competitive product, we believe we will do very well.
Okay, so you're not worried about that they maybe already have an edge here, but you're not worried.
In this particular market, everyone has been up and down from number 1, 2, 3, and so, as I said, market shares move rapidly.
Art, you did give some guidance for the fourth quarter as well as 2005, pretty much in line with what Wall Street is expecting. Some analysts, though, think your guidance is subdued. Are you being conservative here?
We try to give the most up-to-date, realistic guidance that we can. We believe that bottom line growth somewhere in that 15% range is reasonable, and we think that is a reasonable expectation at this point.
One quick thing I want to ask you about is something that was in the news, certainly after the close of Friday. Your company came out and talked about some battery problems in 2 of your heart defibrillators. The stock lost about 2% on the news. Any concern about or any indication of what cost there will be to the company in terms of earnings and revenues because of this?
Well, we indicated we went out with a voluntary notice that in a very small number of our implantable defibrillators, there could be a battery depletion that would be at the end of life, and this has been communicated in an upfront manner. We also said during the call that we believe it will not have a significant impact on our earnings.
Okay, got to leave it there. Art, we always like talking with you. Art Collins there, Medtronic's CEO. It is time for a break, everyone. Coming up, the day's national...
C.com and MSN both give you the results at the end of the show. Investors will be watching shares of Medtronic today after the company reported earnings and said 2005 profits will be in line with Wall Street expectations. Company earned an adjusted 46 cents a share, in line with expectations. Revenues up 15%, $2.5 billion. Stock has gone from about 43 to 54 over the past year, although it certainly has not been a smooth ride. Joining us first on CNBC to discuss results is Art Collins, Chairman and CEO of Medtronic. Good morning, sir. Thanks very much for being with us.
Good morning, Mark.
Implantable defibrillators leading the way?
It, along with our spinal products, really drove growth this last quarter. The implantable defibrillators were up about 26%, which was driven by market growth as well as some new products we've introduced.
Now, the spinal products include what sorts of products?
These are products that are used to stabilize the spine, to take care of pain when a disc is taken out, some degenerative problems like scoliosis. But that business was up 24%, and it's interesting when you add those two businesses together, the implantable defibrillators and spine, it makes up about 42% of total Medtronic revenues.
And so you've got the spinal products, the heart products. What else is going on?
We had a nice uptick in revenues in diabetes,
right, that's what
which was up 19%. We're the world leaders in insulin pumps, as well as a rebound in neurological products. These treat a whole series of neurodegenerative problems as well as intractable pain.
So you've got demographics on your side.
We do.
All of us baby boomers are getting older, creakier, got more and more complaints, more and more things that need to be taken care of.
That's absolutely right. And if you look at The demographics, it also plays into, in this country, somewhere in the neighborhood of between 75 and 80% of the healthcare expenditures go for the treatment of chronic disease, and that's basically right down Medtronic's power alley.
So last quarter you had the 18% rise in the defibrillators, and no one liked that. Now this quarter you did the 26%, and everybody likes it, and you got an upgrade from CIBC. Should they be looking at 3-month defibrillator sales gains, or should they look at a year? I mean,
Joe, we've said over time that you have to look at growth over a series of quarters. Growth always won't be linear. We've said we think this market, the ICD market, is significantly underpenetrated. It's only about 15% penetrated in this market, less so outside the United States. And we believe that about a 20% growth rate going forward over several years is realistic.
I mean, Guidance being acquired, to acquire you, what's your market cap now?
In excess of $10 billion. And by the way, we're not for sale.
You're not for sale?
We're not for sale.
But have you been approached?
No.
But, you know, Bill Gates has a few too many cocktails and you could be gone.
I doubt that.
He's got the 10 bill.
I doubt that.
Mr. Collins, there's been a lot of talk just about how much money the pharmaceutical companies have right now, especially now that they're able to repatriate all of these funds. There was talk yesterday just in the Wall Street Journal, the Heard on the Street column, that they might be looking for acquisitions. Does that concern you at all? Do you think people might be approaching you?
Well, you know, it's interesting. If you go back in time, a number of the pharmaceutical companies were in the medical device business, and they systematically divested those companies. In fact, one of the companies that you alluded to, Guidant, which has now been, at least for the time being, tendered for by J&J, was originally owned by Eli Lilly. So we haven't seen any indications right now that the pharmaceuticals are interested in coming back into medical devices, but who knows in the future.
Now, in terms of the demographics, they are powerful, but you also have a healthcare system that nobody's happy with and nobody's happy paying for. What are you seeing on the pricing side in your various the markets that you serve? Is there any pricing pressure from the insurers or the government or whoever is the final payer for your products?
Well, there's no question in this country and around the world that there is ongoing pressure on the rate of increase of healthcare costs. We believe that to be successful going forward, you need to continue to innovate. We're spending in the range of $1 billion in R&D, and if you don't come up with new products that either result in better medical outcomes and more cost-effective delivery of care, the pricing pressure is going to be significant. So the key is not becoming a commodity product.
Right, and your competitors are clearly thinking the same thing, so it's probably going to be every day a lot of blocking and tackling.
Yeah, and a lot of innovation.
How's the stent development going?
I was waiting for you to ask me that.
I know.
There was a lot of discussion on this last earnings call. As you know, Joe, we are not in the market for drug-coated stents right now. We have a product that is coming. There is a very important meeting taking place in early March at the American College of Cardiology, where we will be presenting on Sunday, March 6th at 5:15 Eastern Standard Time the results of the Endeavor 2 study, and that's eagerly anticipated. We do expect that over the next month or so, we should receive approval from the European authorities to be able to launch our drug-coated stent in Europe.
What drug are you using?
We're using a rapamycin analog that we licensed in from Abbott Laboratories.
Okay.
But this is it doesn't really impact Medtronic today. It's more of a future impact. In fact, on, as you said, $2.5 billion plus of revenues in the United States, we only had $9 million of total stent sales. So this is all upside to Medtronic, but also it's being watched very closely because of the competitive impact on J&J and Boston Scientific.
Right. What is the latest on this battery problem that cropped up earlier this week?
We started last week to voluntarily inform physicians that there was a very, very small subset of ICDs that had batteries manufactured prior to December of 2003 that may have
87,000 devices is what I have.
That's
qualifies
right.
as a small subset?
Oh, well, it's actually 1 in 10,000. We've had 9 instances of a more rapid depletion of battery strength. It's been communicated. The response from the medical community, I think, has been very measured. And as the leader in the industry, we take any condition with a product very seriously. So we got ahead of this one.
You can take it. It's not hard to get out, right? It's right on the surface.
It's right on the surface.
So you don't need to do a thoracotomy or something like
No.
that.
Well, can't you just run down to the Wawa and get a couple of double A's?
You can't run down to the Wawa.
A little more complicated than that.
A little bit more complicated.
Sir, thank you very much for your time.
Good to be with you.
Appreciate it. Art Collins, Chairman and CEO of Medtronic. The Morning Stop.
Medtronic reporting fourth quarter results. The medical device makers' fourth quarter adjusted earnings per share came in at 53 cents a share, and that compared to 48 cents last year, but it was right in line with Wall Street estimates. Net income, though, was down 65% after the company took a charge to settle a legal dispute with the surgeon who invented many of the spinal products. He's, I think it was over $1 billion, this lucky guy. Guy's like winning the super lottery, this California surgeon. Anyway, revenue for the quarter rose 4% to $2.7 billion. Let's talk first to Art Collins, the CEO, live from Minneapolis, Chairman and CEO of Medtronic. You usually come in here, Art. What's the problem here today? You don't like us anymore?
Oh, I still like you, Joe.
Still
the weather's so nice here, I decided to say.
That guy, I guess you finally had to do this. The products are so profitable, but how happy is he? The guy that got what was it, $1.3 billion?
That's right, Joe. The settlement really did two things for us. First of all, it settled a long-standing legal dispute that we had with Dr. Michelson and Carlin Technologies. That's behind us now, and also very important, we obtained through this settlement all of his intellectual property. Those are all the patents that are in place now, all the filings that are in process of going through the patent office, as well as any future investments. So what it does, it takes a great unknown away from our second largest product line, which is our spinal business, and it gives us intellectual property that we can not only use internal to Medtronic, but we have that to use as we deal with other companies in the field.
Mr. Collins, for 2006, the forecast that you gave is below where Wall Street is. Therefore, they would say that you're guiding lower. I don't know whether it's lower than your internal projections, but is there a reason that it's not quite, the numbers not quite up to par?
Well, let's talk about the numbers, Joe. We finished this year at $1.86. That is before any of the charges you alluded to.
Right.
The first guidance that we have given on our fiscal year 2006 that we have just entered now, because we are on a May 1st start, was between $2.10 and $2.15.
Right.
And if you look at the growth rates over the $1.86, that comes out between 13 and 16%.
And 15 is what you'd like to do.
15 is our long-term objective over any 5-year period. So we felt that it was very good guidance. It was the first time we gave guidance, so there were some analysts that, even though they continue to look at 15% as a very strong growth rate, had been slightly above that. So we feel very good about where we are.
When you're putting a device into someone's chest and hooking up some wires to their heart that's going to shock them when there's not some type of rhythm, it's pretty sophisticated. You might, you got to be careful. Obviously, you had to recall because of a very small incidence of battery problems. You had a recall that you could see in a charge in this quarter. And now we've got Guidant in the headlines now, waiting 3 years to recall one. Can you comment on how, on the Guidant situation, or how you guys would have handled that?
Well, how we handled it speaks for itself. We talked about this the last time I was on. We went forward with a voluntary recall after discussion with the FDA, where we had a very low-level potential occurrence that could take place. This was, as we talked before, about 87,000 units that were affected under the recall, and we only had 9 incidents, and there have been no deaths or injuries. But it had a potential to have the therapy very rapidly depleted. I don't think it's appropriate that I comment on the situation with Guidant. How they handled it is somewhat different, and I think it's best that the Guidant management comment on their unique situation.
All right, let me ask you this. We had Mark McClellan on. He indicated he'd like to reimburse everything if he could, anything that would save anyone's life or the quality of life. Yet, we know how expensive these
defibrillators can be 30 grand, the spinal products, the hip replacements, all of these things, they're gonna bankrupt the system if every person gets the state-of-the-art device. Isn't that going to cut down on your growth rate in the future?
Well, first of all, we work very closely with the Center for Medicare and Medicaid Services and with Dr. McClellan, and we have a great deal of respect for Mark. I think there's a different way of looking at the value of these devices, very different than pharmaceuticals, where if you have a script, you go into your pharmacy, you get it, you basically pay on a monthly basis, and over the life of that therapy, that cost for the therapy can be very significant. Medical devices and technologies have an upfront cost, but many of the therapies continue on for years and sometimes decades. So if you look at the true cost effectiveness, and by the way, Mark McClellan has written on this, he's both a doctor and an economist, he's indicated that he thinks that the medical technology is perhaps the most significant cost savings that has been introduced in the system in a long period of time. I do think there's a requirement for good, strong clinical trials and also trials that not only determine the medical outcomes but the cost effectiveness of the therapy. But we believe very strongly that medical technology is part of the solution as opposed to part of the problem.
All right, we've got to go. I know you're going to report some stent data. I guess it's probably positive. You'll be the third or fourth, I guess, into this market for drug-eluting stents.
Well, there's a big conference going on over in Paris. Our major data that we will present will likely be in the fall, and that will be done in Boston at a major vascular conference. But we're eagerly awaiting the CE approval in Europe for our Endeavor drug-coated stent.
All right. Appreciate it, Mr. Collins. But Mark McClellan is an economist and a doctor. Boy, I'm glad he's not a practicing physician. I would not want an economist practicing any medicine after seeing their calls. Anyway, thanks, Art, Chairman and CEO of Medtronic, joining us from Minneapolis.
The markets are lower, but shares of Medtronic are gaining ground today. It's the leading maker of implantable medical devices called defibrillators. The company reported first quarter profits last night. Now, first quarter profit did fall about 40%. That was because of costs, including expenses related to a deal and a legal settlement. Strip that out, you have 50 cents a share. That was a penny better than expected. Joining us now to talk about prospects for Medtronic is Art Collins. He is the CEO of the company. Mr. Collins, it's a pleasure. Thanks for joining us.
Aaron, good to be with you.
All right, well, let's just start off with the quarter that just ended. Your biggest businesses, those defibrillators. How would you describe how that unit performed for you?
Very well. Revenues were up compared to the same quarter last year, 30%, and it was a very robust market. We believe the overall worldwide market grew about 26%, so growing 30%, we actually did pick up share. We've had several new products introduced, several clinical trials that have continued to demonstrate the efficacy of the therapy, so we feel very good about where that business is today and where it's headed in the future.
Well, you talk about growing a little bit faster than the market, 30% versus 26. Certainly a reason for that, many have said, is Guidant, your biggest competitor, had to pull some of their defibrillators off the market part of June and all of July. Have you, so far in August, been able to maintain the market share that you took away while they had to take their device off the market?
Yes, as we indicated in the earnings call last night, even though it's only a few weeks into August, and August, because it is the summer month, is not always the greatest barometer of the whole quarter, we're out of the blocks very well. And we feel, as I said earlier, good about our product line. The Guidant impact was really only in the last month of the quarter. And I think the thing to remember is that this is a very under-penetrated market. We believe in the United States, only about 20% of the people that are indicated for implantable defibrillators have yet received them. So the underlying strength of the market, we think, will continue for some time in the future.
It actually raises a question I wanted to ask you, Art, about the debate out there right now, which is that some have said that there's just not enough research out there on these defibrillators. It's hard to tell who's at risk, who isn't at risk. So a lot of people are just getting them put in when perhaps some doctors are saying we're not sure if they need them or not. Do you think that that's a fair issue right now, and maybe we could see a slowdown in the growth rate as more data comes in?
No, actually, I think it's quite the contrary. I think if you look at the most recent trial, that was the most extensive trial ever run for a medical device in the implantable stimulation area, and that was called the SCUT-HEF trial. It's an acronym for sudden cardiac death in heart failure patients. It was started in 1997, over 2,500 patients involved. It was actually underwritten by Medtronic, but it was in concert with the National Institute of Health. About a year ago, the data was presented. It was far and away conclusive in that individuals that received these devices had a 23% improvement in mortality. It was published in the New England Journal of Medicine. Within 1 week, the Center for Medicare and Medicaid Services extended national coverage. So I think the data is very strong in this area.
If the data is that strong, what does that mean for your growth? And obviously, you said 30% last quarter. It is your biggest business. I believe your revenue there was $718 million. I pulled it right from your press release. Will defibrillators continue to be the biggest part of your business? You've got spinal, you've got diabetes, you're expanding into obesity. Is defibrillators going to be the #1 focus for Medtronic?
I think for a period of time, there's no question. Interesting, you mentioned the spinal business. If we add the spinal business together with the implantable defibrillator business, it makes up about 47% of total Medtronic revenues. And those revenues collectively grew about 28%. If you add in diabetes, which grew 19%, it's over 50%. And the underlying markets for all of those three major businesses are very strong, and they're under-penetrated markets. So a lot of people that have a need for the therapy haven't yet received it.
What about drug-coated stents? You've entered that market. It's highly competitive. We were talking about it as a war zone. I mean, you've got Boston Scientific and Johnson & Johnson duking it out every day. $5 billion a year is the average estimate for the market. How big of a share will you have?
Well, we've just received CE mark in Europe and have just started the introduction. We actually received it on the last day of the last quarter, so it had no impact on our first fiscal quarter. We feel we have a very competitive product. We have what we believe to be the best bare metal stent, and we have a rapamycin coating. As I said on the earnings call last night, I think watching what happens in the next quarter and two will really tell the story on the market share that will garner here. This is not a market that will take a long period of time for our position to play out. As you indicated,
are you going to stay number 3, though, or are you going to move up?
We have an objective to move up outside of or better than the number 3 position. Time will tell, but we're feeling very good, and the sales force, most importantly, is very optimistic.
All right. Well, thanks so much. A lot more to talk about. We'll have to have you on again soon. Appreciate it.
All right. Sick of diets? Giving up on exercise? Well, listen up. What would you think of a new device that makes you feel full, even if you haven't eaten all that much? We'll meet the man behind the company ready to put that on the market. He's Arthur Collins, the chairman and CEO of Medtronic. Thanks so much for joining us.
It's good to be with you, Brenda.
So this is a device that can actually help obese people feel full and lose weight.
It is. It's similar to a pacemaker, and it's really for the severely obese or morbidly obese, so not for everyone. They have body mass indexes, and if you have a body mass index that is greater than 35, then...
So you don't, if you just want to shed a few pounds, this is not for you.
No, but in the United States, in that category of severely obese with a body mass over 35, there are 25 million Americans, and if you go down just 5 points to a body mass index of 30 or greater, there's about 65 million.
So there's a big market. In fact, this device is in Europe.
It's been in Europe, and it has recently been approved for sale in Canada.
And so through an operation, it's placed within your stomach? Is that what happens? Or
yes, what happens is there's a small incision that's made under the rib cage, and then there are 2 electrodes, or they're called leads, that, like a pacemaker, instead of going to the heart, go to the wall of the stomach, and then very low-level electrical current is sent in, and it tricks the mind to think you're full.
Now, in Europe, people have lost a lot of weight on this?
Yes. In fact, we're going through a clinical trial in the United States that should be concluded by the end of this year, but we're looking for weight loss in a minimum of 20%, and for individuals that weigh that amount, that's a significant amount of loss.
In what time period are they losing that?
Well, it varies by individual. Sometimes the loss takes place in a month, sometimes it takes 6 months, but the key is, once you lose, that you continue to keep the weight off. In the United States, for example, there is about 160,000 gastric bypass or lap band procedures each year. That's growing about 30%. But the difference with this product is it is completely reversible if a better therapy comes up, and it leaves the individual's digestive tract intact with fewer side effects.
Now, how much in Europe, I know you haven't priced it yet here, but how much in Europe does this procedure cost?
Procedures range from somewhere in the neighborhood of $15,000 to $20,000, and it hasn't been, you're correct, priced in the United States.
All right, well, we'll be looking for that. Thanks so much, the CEO of Medtronic.
Coming up on Squawk Box, they do a lot to keep your ticker in tip-top shape. But how is the heart of Medtronic?
A better than expected quarter at Medtronic. It posted 50 cents a share, X items, topping consensus by a penny a share. Sales grew 15% to $2.7 billion. The company saying its implantable defibrillator, spinal and diabetes business represented more than half of revenue. First on CNBC, we will be speaking to Medtronic CEO Art Collins in just a few moments.
We're talking profits, outlook, and stents with the chairman and CEO of Medtronic. Another interview you'll see first right here on CNBC, America's Business Network. Strong sales of implantable defibrillators helping Medtronic to better than expected first quarter results. Here are the numbers. The medtech company earned an adjusted 50 cents a share, a penny ahead of estimates. Revenue up almost 15% to about $2.7 billion. Company also expressed confidence it could hit the high end of its 06 earnings guidance, but that didn't do much for the stock in aftermarket, down 15 cents, 54.50. Joining us first on CNBC, Talk Business, is Art Collins. He is chairman and CEO of Medtronic. Good morning, sir. Thanks for being with us.
Good morning, Mark.
Are you taking market share, or is the market expanding? What?
We're taking market share. Specifically, you're probably referring to the ICD market. And we had strong sales. We were up 30% quarter over quarter, and we took 2 percentage points of share. And as we mentioned in the earnings call last night, the momentum built as we moved through the quarter.
Is that because of all the troubles that Guidance had?
I was just going to say, is this because you're good or they're bad?
Well, there was some impact, but it was not in any way the major impact on the quarter. We've just introduced several new products. We've expanded our field force. There have been 2 major clinical studies that have indicated the efficacy of the therapy, and the market was up very strong. It was up about 26%. So strong market, good position with products, and there has been some disruption in the marketplace with some of our competitors.
What is going on in the diabetes market? Because every time I pick up the paper, I'm reading more and more about potential new therapies. Barron's had a cover story that 360 million people in a certain period, I don't know, 20 years or so. That sounds like a market that has enormous potential and has not just for making money, but also for medical advances.
Well, it's been described as an epidemic. In this country, it's estimated that somewhere in the neighborhood of 20 million Americans have diabetes. As you know, we're the world leaders in insulin pumps to treat diabetes, and we've just received FDA approval for a continuous glucose monitor. Most people are projecting that this is going to get worse as time goes on because of eating habits, obesity. By the way, one of the reasons we just decided to move into technology that will allow us to treat obesity. But it's a huge problem and one that we feel we can provide good solutions to.
What sort of technology could treat obesity in general terms?
Well, what we have just acquired, in fact, we closed the acquisition this quarter, is a company that has a pacemaker-type product that paces the stomach.
Oh, I read about that too, yes.
We acquired Transneuronics. We were actually working on this technology in concert. And what the pacemaker does, it stimulates the stomach with very low-level electrical waves, and you believe you're full. And this, again, is a huge problem in the United States. If you look at the body mass index as an indication of obesity, it's estimated that 25 million Americans are either severely obese or morbidly obese, and probably 65 million are characterized as obese. Right now there's about 160,000 procedures with gastric bypass and lap bands, and we think we have a better alternative.
I was just going to ask, how competitive is your technology with that gastric bypass in terms of risk to the patient and in terms of cost?
Well, less risk to the patient because we do not disturb the digestive system. It's a very minor surgical procedure. The clinical trial, the pivotal trial in the United States should be concluded, and we should submit to the FDA by the end of this calendar year. The cost will be very competitive, but the main thing is we believe that the complication rate will be lower.
Mr. Collins, drug-eluting stents. Yeah. Your company was late to that market. Of course, there are 2 key entrants here in the U.S. that have been battling it out for market share. But you're going to be here probably sooner rather than later. Bring us up to date on when you actually expect to be in the U.S. market. I know you're already, I believe, in Europe.
That's right, David. We just received CE mark in Europe, and we're just in the midst of launching in Europe. It's August. It's a little slow there. We're in 40 countries. We have our targeted entry into the United States now about the middle of 2007. As I've mentioned, I think on this program before, that I think we should watch Europe very carefully to see what happens. We believe we have the most competitive stent.
Why?
It's more deliverable. Our driver stent now, it's a bare metal stent, is the leading bare metal stent in the world. And now we have a rapamycin analog similar to J&J that's been coated on that. And I would guess in the next 2 quarters, we'll let the numbers speak for themselves.
So watch the market share gains that you have in Europe to try and determine whether you're going to have
and when I talk to you in 2 quarters, if we're not doing well, you can say you were wrong. If I'm doing well, I was right.
But you're looking for better gains than what analysts had been expecting. They'd been looking for 10 to 15% market share gains. In Europe, you were guiding to even higher.
That's right. On the earnings call last night, our chief operating officer was asked that question, and the 10 to 15% that the analysts have, and he said, I expect better. He didn't say how much better, but better.
2 seconds on defibrillators?
Yes.
I mean, where do you see the competitive landscape with guidance?
Well, Jerry, we, as I mentioned, have very good momentum coming out of the quarter. We have just introduced another defibrillator that goes with the 3 that we introduced last year. We believe we have the best lineup of ICDs in the marketplace. We have a patient monitoring system that also is getting a tremendous amount of play. So I think we're going to see this momentum continue.
All right, we have to leave it there. Thank you very much for your time, though.
Good to be with you.
Appreciate it. Art Collins is chairman and CEO of Medtronic.
Good morning, I'm Joe Kernan. You're watching CNBC Squawk Box. Futures indicating a higher opening this morning. You can see the Dow's pulled back a little, was up about 48 earlier, but up 41 in studio. Guest host today, Art Collins, chairman and CEO of Medtronic. All right, the floodwaters are being pumped out of New Orleans this morning. But wow, 350,000 houses. That's why you're in the business, to help people, but that's going to be a big, big price to pay. You're lucky, Art. And I do want to welcome Art Collins, chairman and CEO of Medtronic. You're not in the insurance business, but every business is going to be affected by Katrina. We'll start out with a lot of corporate giving. You guys have pledged what so far for Katrina relief?
The Medtronic Foundation pledged $1 million. That was an immediate gift. Clearly, our employees will step up with significant giving. Yeah. It's affected, as you said, different corporations in different ways. The moment that Katrina was on its way to the Louisiana coast, we started to plan for what would be the likely impact, not knowing exactly what it would be. We have a number of diabetes patients that need to get insulin. We've been shipping disposables for our insulin pumps to the Red Cross to distribute. We sent external defibrillators to FEMA. They're bringing those in via helicopter to affected areas. And interesting enough, batteries also, because they're out of power.
Right. The externals would need batteries. Absolutely. You can't plug them in anywhere.
Drug pumps that are delivering morphine for pain or baclofen for spasticity. A lot of the hospitals were down, so we had to identify where are the hospitals that are up so we could direct patients. Now, very importantly, the first thing we wanted to check on are our employees. And luckily, they've all been accounted for. I think about half of them in the 3-state area have lost their homes, at least access to the homes, and we're interested now in following up on extended family. But the devastation has been tremendous, and we're focusing a lot on making sure patients get access to the therapies they need.
It's what everyone's got to do right now. You have to, instead of thinking, well, wow, my shipping costs are going to go up, how do I plan for this?
We don't have to think about that.
Right. Same with Allstate. You can't think about, wow, $350, what's this going to cost me? You got to think about, I got to get in there immediately, find people, do what we can on the ground, and to try and cut some checks that you can cash somewhere other than an ATM, which is down.
Well, it's interesting, our employees in the area, one question is, will I get paid? So we've extended for a 2-month period. People that were on commission, we've just said, you'll be taken care of. But even the employees that needed to get checks that normally would get them at their bank, you've got to make arrangements to get them at ATMs.
Right. Well, we'll talk more about how it actually affects your business later. I would think that some surgery is elective, too. Not that you do so much, but you're not going to get a hip replacement. If you were planning one this week and you live somewhere in Louisiana, you're probably not.
You got other things on your mind.
Probably got other things on your mind. But then again, angioplasty or there's certain things that I guess can't wait. You do need a facility to get them done, though, right?
That's right.
All right, we'll talk more. We've got 3 hours to talk about this. Let's check on the markets this morning.
Aquaman, the lamest superhero, bar none.
No, he's going to.
He's right up there with Iceman.
He can talk to fish.
Vinny Chase is going to bring that character alive, my friend. He's
He
a very
can talk
sensitive
to fish.
actor. We got to go. We're just getting started here on CNBC Squawk Box. Coming up next, Steve Leisman is down on the banks of the Mississippi, taking a look at the impact of Katrina on the nation's economy. Who better to do it? Stay right there. We are Squawk Box right here on CNBC. All right, up next, the latest weather forecast from Katrina Voss at AccuWeather. We're in a minute. Plus, breaking into the $5.5 billion stent market, we'll talk strategy with Medtronic CEO Art Collins. Stay tuned. Medtronic, meanwhile, announcing some positive long-term results for Endeavor. That's the drug-eluting stent that Medtronic hopes to introduce eventually in this country. Let's talk about that eventual entry into the market. The results are similar to the Boston Scientific and Giant, to Cipher and to Taxus. Same efficacy?
There's a large cardiology conference going on in Stockholm, Sweden, and we released results of 2 studies, Joe. One was 2-year results of our, what we call the Endeavor 1 study. That was the first clinical trial. And the second was 1-year results of a much larger study, the Endeavor 2 trial. And what the studies essentially said was that the product does a very good job of keeping the arteries open, but more importantly, the safety profile of the stent is very, very safe. And that's important because cardiologists are interested in not only getting the stent to the right spot and making sure the long-term results of keeping arteries open is good, but they want to make sure there's no side effects.
This is a code for Boston Scientific's problems that you're sort of beating around the bush?
No, not at all, not at all. We'd rather talk about our product, but the important point is...
Why do we need another stent? Unless there's some problem with the side effects for Boston Scientific or Cipher, you don't need another drug-eluting stent, right?
Well, there are only two people in the market right now in the United States.
Right.
That's right, and different cardiologists will like different stents for different vessels.
The way you can deliver it, the way you deliver it, the way you snake it around, a curve in the artery.
These tortuous vessels, and we believe we have the most deliverable stent in the market in our bare metal stent, and that's the same stent that we've coated with our rapamycin coating. And so when you look at making a decision, you want deliverability, you want efficacy of keeping the artery open, and you want it to be safe.
Tell me about the restenosis rates versus a BSX or a J&J.
They're comparable. They're within the same range statistically, and you're always going to have slight differences depending on the study, depending on the patient population. But the point I think that the analysts are looking at over in Europe right now is not only the results of the studies, but remember we got the approval, CE mark approval, on the last day of our last fiscal quarter.
Okay.
And so we've been in the market for about a month. The uptake has been good, and so we're feeling very good about our position.
Who still would get a bare metal stent if it was not the type of disease that in the United States? Who would get a bare metal stent versus a drug-eluting stent at this point?
Well, right now, the United States has moved to about 80% use of drug-coated stents.
And the last 20, what type of market share do you have on the bare metal?
Oh, we're the market leader in the bare metal,
So
as we are in Europe.
You figure the ease of deliverability once you go to the drug-eluting could help you get a good piece of this market.
Definitely. And in fact, in Europe, as I said the last time I was on the show, some markets you have to wait a year or more to find out the uptake of your product. I think we're going to find out within 2 quarters and let the market talk about the success of the product.
But in the U.S., calendar 07, maybe even second half of 07, I read, possibly.
That's possible.
For the U.S. All right. You've got so many things that we're going to talk about. That's not even the cardiac rhythm business. So we haven't.
Well, what we just talked about was less than 9%.
Less than 9%. You got some neat stuff coming. You always have the Brave New World type stuff that I like talking about. Anyway, coming up, OPEC says it's going to cut oil prices. What does that mean?
The prices that it sells oil for October crude to the United States and to Europe, both. It's going to be cutting prices by somewhere. Yeah, apparently they can.
Right? That's not what it is. They're not. They've got to be getting nervous at 67. SUV sales.
Yes,
they've got to be getting a little alternative
last week
energy.
is when you really saw a lot of the alternative energy stocks start to pile in. We had one fund manager who takes a look simply at alternative energy stocks, and he talked about how he saw another $40 million that went into his fund just taking a look at those alternative energy stocks last week. So when you see prices get up that high, it is the time when investors start looking around and trying to figure out if there's another way that we could do without crude oil altogether.
Well, of course, and crude is less the problem right now. The availability of crude is less the problem, right? Of course.
It's the refined products that we're really having the big issues with.
Yeah, I mean,
crude oil prices actually dropped last week.
Yeah.
Well, we saw when oil fell back to $12 after the first energy crisis, we saw how little OPEC can really do.
What did you pay? What did you pay last time you filled?
I think I paid, I buy high octane. I think I paid so it's different.
I paid $3.29 for regular.
I paid over $3.50.
You know, I was out in Los Angeles. You talk about the question of gouging. This last weekend, I paid between $2.95 and $3.25. So the question is, what's that difference in 20 to 30 cents? Where's it going, and why is it different?
One block from another.
30 cents. That's at 10 to 15%. What other pricing situation? What other commodity you go purchase that has a 10 to 15% elasticity in the pricing model? I mean, that's just ridiculous.
Although a lot of times the gas station owners will tell you they're not the ones who are making money. They were saying their shipments jumped immediately, which in a lot of cases it did. Their costs jumped immediately, and they have not been able to get the same amount of gas that they've seen in the past.
This is one of these supply issues where there's
somebody's making more
nobody's money. A criminal here. Right. Everybody is the victim of the guy further upstream than they are. Yeah. Nobody has been identified as the bad actor in this whole circumstance, but somebody's
making more money somewhere along the line.
When's the last time you ever heard of raising prices 3 times in 2 days?
Yeah.
Yep. All right, we got Dana Telsey is on the phone, and this is a...
There are differences in the color, in the high-rise, low-rise, in the fit, in the waist size, so it makes a difference.
Oh, Dana, this is Art Collins. My daughters are 24 and 28, so it's been a while since I've been doing back-to-school shopping, but being a Minnesota company, where do the discounters fit in, like Target or Walmart?
I think what's happening with the discounters is the quality of their merchandise certainly has gotten better, and they've gotten a little bit more fashionable. I almost think the bottoms are for fit, and the tops can be for style, and where people are looking to implement from discounters some of the items. So I think you're seeing them being mixed and matched with accessories and with tops a little bit more so than with bottoms, given that people look to bottoms as being a very important part of fit.
Absolutely. All right, thank you, Dana.
Thank you.
We could obviously we could go till 10 talking about this, but thanks to Dana Telsey, Senior Managing Editor, Retail Analyst at Bear Stearns. So at 25 and 28, you're not paying for the clothes anymore for your dog?
I didn't say that.
Okay. Yeah, I didn't think so. I'm worried. Anyway, up next. And welcome back to Squawk Box. Shares of Coca-Cola indicated higher on an analyst upgrade. Do they mention Coke Zero? Have you tried any Coke
Zero? There's does that come with lemon?
No, it might, but I would upgrade if I could upgrade it. I would upgrade it based on Coke.
On Coke Zero.
On Coke Zero, it tastes like regular Coke. With Diet Coke, does not. I don't know whether you know that.
I don't think it tastes like regular Coke at all. I think it tastes like Diet Coke.
No, Diet Coke tastes like Diet Coke. Coke Zero tastes like. Go ahead.
All right.
Well, I think it's highly likely that sometime in the near future, Delta will file for bankruptcy.
Northwest?
I think there's a good chance there, too. Again, this fuel thing, they've been under pressure for some time, trying to get their labor costs down. I think they may well run out of time as well.
Don, this is Art Collins. I'm going to fly back northwest to Minneapolis late this afternoon. There's a mechanic strike going on right now. What impact do you see that having on Northwest's future?
Well, Art, there's no question that Northwest has to get their labor costs down. They've been now in this strike situation for some time. Certainly the FAA is going to continue to look at them very carefully, but as I said a week or so ago on this show, I think the management of Northwest is highly focused on running this airline as safely as they've ever run it, and I think it's just one more challenge for the management there.
And Don, they've got a pretty good cash position compared to a number of the other airlines.
They do indeed. Northwest isn't going to run out of cash anytime soon. What Northwest is going to have to decide is whether or not they can get through this and make the changes necessary without filing for bankruptcy.
You know, mechanics at Northwest, they've got they've got a replacement staff in there. There's no way Boeing is going to be able to hire machinists. Okay, Mr. Carty, appreciate your time again today.
Not at all. Good to talk to you, Joe.
Okay, Donald Carty, former AMR chairman and CEO. Up next, Medtronic chairman and CEO Art Collins talks about growth and innovation. And this is a company, you've got to innovate in this business. And still to come, Labor Secretary Elaine Chao on her agency's efforts to create jobs for Americans dislocated by Katrina. Stay tuned. This is Squawk Box on CNBC. All right, let's turn back to guest host Art Collins, chairman and CEO of Medtronic. Art, this past quarter, Medtronic's revenues were up almost 15%. Can you sustain that kind of top-line growth? And what are you doing to achieve it?
Well, the short answer is yes. If you look at last quarter, the main drivers of the business were what they've been for the last several quarters, our implantable defibrillator business and our spinal business. They collectively represent over 47% of the corporate revenues, and they were up about 27% when you combine the two numbers.
We talked about the way you want to move into the stent market will be maybe at BSX's expense, one of the company's expense. Tell me about guidance recent problems and how that helped Medtronic in your defibrillator business. You must be gaining market share there with the mess they've made of that situation over there, right?
Well, at the quarter-end discussion we had about a month ago, I indicated that we only saw an impact in the last month of the quarter. We gained several percentage points in the implantable defibrillator business. We continue to have strong revenues, but I don't think it's simply a matter of guidance problems. We have the strongest lineup of new products we've ever had, and the market is very healthy. The overall market last quarter grew in the mid-20% range.
So you can't tell us what you paid for this this company you just bought at the end of August, I guess. It was terms not disclosed?
Oh, this is the small, the IGN.
How small? Was it very small? Because
it was not a large acquisition, but it's important particularly in our products that are implanted in the brain,
I mean,
leads.
It was fascinating.
Yeah.
It sounded amazing.
If you read it. So when you're going to, okay, why would you want to implant leads in someone's brain? I guess you'd want to deliver some electrical stimulation?
Well, we have a pacemaker product, and rather than the electrodes go to the heart, they're called leads. To treat Parkinson's disease, essential tremor.
How does it treat Parkinson's? What does it do?
Well, you actually go down into the subthalamic region of the brain.
Okay.
By the way, the patient's awake.
That's what I couldn't understand.
Yeah,
The new version of it, they can move around
Well, they
while
can
you're
move
doing
around.
this?
Remember, there are no nerve endings in your brain. So in order to get that lead in the right spot, and people will be shaking uncontrollably, you get it to the right spot, and all of a sudden, you're normal again.
Okay.
Now, the way the procedure works now is there's what's called a stereotactic neurosurgery device that is placed on your head, and it holds it very straight.
Rigidly.
Rigid.
You can't move for 3 hours.
No, and what we purchased was a product that allows you to move. It's not as painful, and so it just helps the neurosurgeon.
And the surgeon can know exactly where to place the leads, even though the patient might be moving, and you actually have an image when he's putting it into the...
You have an image, and you get it right down into the subthalamic region, but when you really know you're there and you're measuring noise, but then the patient can actually tell you.
And you could treat Parkinson's?
Essential tremor.
Tremor.
Dystonia, which is another area. And we're looking at a whole
Depression,
series.
possibly?
We're working on clinicals for depression, obsessive compulsive disorder, Tourette's syndrome, a broad range of neurological problems.
Electrical stimulation might help in all of these cases.
Yeah. Well, just think the way the body works. It's a whole series of chemical, electrical reactions,
Right.
whether it's in your heart, your brain, or other parts of your body.
All right. All right, we'll talk more. This is part of the innovation we were talking about, and that's so many other things to talk about, which we will. Up next, trading checks at the Chicago Board of Trade. Futures continue to point to a higher opening today, although they have pulled back a little bit. In studio as guest host today, Art Collins, chairman and CEO of Medtronic. Let's check on the early bond market action at the Chicago Board of Trade.
And again, this nationwide network is available to people throughout the country who have left the devastated areas. That's why I mentioned they don't have to go home to their home community. Call the toll-free number. That's what that's there for.
Secretary Chao.
Madam Secretary, just...
Sure.
Secretary
Yes.
Chao, this is Art Collins. Let me follow up on your last comment. Clearly,
Sure.
a number of workers and their families have been displaced as a result of Katrina. When you look a quarter or two in the future, with all the rebuilding, have you estimated what this may do to actually increase jobs in the affected area and elsewhere?
Well, certainly in the short term, the regional devastation is very significant. But as for the national impact, we're not quite sure yet. But what will happen, and I have seen this in subsequent, in previous catastrophes and hurricanes, you know, there is a bright spot in that new jobs do get created.
Because Nextel partners also, if they can prove that they were hurt, the value of their company was hurt by this, might end up getting some monetary damages down the road.
I'm still working on that S symbol.
The S symbol used to be Sears.
I know. I see it on the.
You still think Sears, don't you?
I do. And I see it on the active list wherever I see it. It's going to be a while.
It's like trying to call MO Altria instead of Philip Morris. Takes you a while to sink in.
And then Sears Holdings is now, it's not KMRT, it's all very, anyway. Up next, investing in healthcare.
This company's generating positive earnings per share now, began in 04, and outlook out to 06, 07 looks good for this company.
JC, Art Collins has a question. You're going to end up owning MDT, I think, when he gets through with you.
JC, we won't talk about Medtronic right now, but you heard the news on Novartis' bid for Chiron. What's your projection on what's going to happen there?
You know, it could go through. We do own Chiron in the portfolio. I was glad that we did when it popped 18% last week. It could go through after that run up of 17 to 18%. We have it fairly valued right now, so it looks like Novartis put a pretty good price projection on that stock.
And this is Squawk Box. I'm Joe Kernan, in today for Mark Haynes. The countdown is on, 30 minutes to the opening bell. Futures are indicating a higher opening. It's been pulling back just slightly as the morning has progressed, but still looks like a firm opening. In studio, guest host Art Collins, chairman and CEO of Medtronic. And there are signs of progress this morning in New Orleans.
There's just been a tremendous amount of underinvestment in those, we think, over the past couple decades, and those are going to receive a lot of dollars going forward, in our view.
Chip, this is Art Collins. 20% cash, that can't stay there for a long period of time. Where's it going to go and when?
I wish I knew. It's going to depend on the environment. You know, it depends on what interest rates do. If rates shot up a lot, we might find fixed income more attractive. If the risk in the market seemed to moderate, or the economy seemed to moderate, we might go back into equities. Those are some of the things we'd look at.
News crossing on Anadarko and Valero. Becky.
Right now we have a buy rating on just one stock, Fuel Cell Energy.
John, this is Art Collins. Assume there's going to be a continued strong demand for oil. Any interest in oil shale?
Oil shale certainly does become more economical up at the $60 per barrel level. What we're seeing now in some of our coverage is coal to liquids, for example, or heavy oil upgrading. That seems to be a bit more near term, but to your point, oil shales, especially to our neighbor in Canada, there's certainly a vast amount of resources, and at these price points, certainly gaining a lot of interest from strategic and equity investors.
And we're in the countdown of the opening bell. And Bob O'Brien.
The Saudi oil reserves constitute almost 25.8% of oil, all the oil reserves in the world.
Your Royal Highness, I've got Art Collins here. He's the CEO of Medtronic, which is, I look at your holdings. This is one that I guess you missed. Been quite a stock, but he wants to ask you a question.
Your Highness, this is Art Collins. You said that $70 barrel oil isn't acceptable. Where would you see oil at the end of the calendar year if you had it your way?
The stated position of Saudi Arabia is that we would like to have a price for oil in the range of the 40 to 50. But you have to understand that Saudi Arabia, although it produces quite a bit of oil, around 12 million barrels a day, still there are many factors that are outside the power of Saudi Arabia.
The port of New Orleans is partially open today after Hurricane Katrina wreaked havoc on the port last week. Up next, final thoughts from our guest host, Art Collins, Medtronic Chairman and CEO. Stay with us. Great. Let's get some final thoughts from guest host Art Collins, Chairman and CEO of Medtronic. We didn't really talk that much about whether your business is actually going to be affected. You are going to pay higher shipping costs for FedEx and UPS and a lot of medical equipment goes through those channels, right?
Well, I think the biggest impact, as I said in the first hour, other than making sure all our employees are safe, are making sure that we can get product to the hospitals that are up and running and supplying therapy to patients. And for those hospitals that have been effective, making sure that we can direct individuals who need the therapy to hospitals that are open.
You gave me a chart. I don't think we actually put this in graphic representation. I'll just show it. You know, it's not important that you see it. I can tell you what it says. It's since 9/11. And it looks at Medtronic, Johnson & Johnson, Intel, Microsoft, GE, Abbott Labs, Pfizer, and Merck. And you're up 40%. The next closest is in the teens, and I guess that's Johnson & Johnson up about 19, 18% or so. Everything else, either single digits or actually down. What are you saying?
Well, obviously, new products are driving the growth of this company. In the quarter that we just reported, about 2/3 of our revenues are generated from products that have been introduced in the last 2 years. So continuing to invest in R&D and new product development is a key to the performance in the past and will be a key to the future.
You took business from, or may take business from Boston Scientific. Also another competitor's problems, Guidant. You've been taking some business from a J&J Guidant combination is going to be formidable for everyone in this business. Is the deal going to go through as is, in your opinion?
Well, the simple answer is, Joe, I don't know. There's been a lot of speculation on whether the deal will go through or whether it will be renegotiated at a different price. I'm sure the board of directors of J&J and major investors are asking a lot of tough questions. But at this point, we don't have a position on whether it will or will not go through. We'll continue to focus on serving our customers, and we have a lot of respect for J&J and Guidant, and we'll deal with them independently or together.
Is there anything in the last year that your scientists have discovered or are working on that's going to be a big winner for you in the future?
Well, there are a number of different areas that our engineers and scientists are working on. I think one of the things we've talked about before is the fact that many of these devices are no longer simply delivering therapy, but they're also being able to monitor patients, and that information is being able to be transmitted from remote locations to improve therapy and the cost-effective delivery of care.
And I guess we don't have much time. You have to get a lot of software. There's a lot of fields converging in your business right now, aren't there?
No question.
MIT, you're keeping those guys busy in the graduate school there, I'm sure.
No question. We want more of those engineers, whether they be bioengineers or information engineers.
All right, thanks to guest host Art Collins. I wish we could have you once a week, actually. I love this stuff. Anyway, Chairman and CEO of Medtronic, not endorsing Medtronic. That's it for Squawk Box. I'm Joe Kernan. Tomorrow.
Today, first on CNBC, the CEOs of Medtronic and Applied Materials on earnings and what's ahead. Squawk Box today, 7 Eastern on CNBC. On the money.
Squawk Box starts right now, and here's Liz Klayman with this morning's top stories. Liz.
Good morning, Michelle. Good morning, everybody. Medical device maker Medtronic reiterating its financial outlook for the next 3 years and says it remains on track to deliver 15% growth for any 5-year period. This after the company reported profits in line with expectations. Arthur Collins, Chairman and CEO, will be along at 7:40 Eastern to discuss the numbers and the outlooks. So you can't miss what's on the box this morning. Squawk Box starts right now.
Good morning. Welcome to Squawk Box. I'm Mark Haynes. A special welcome to our viewers in Europe and Asia who join us at this hour. Coming up, Medtronic out with earnings. Chairman and CEO Art Collins joins us to talk profits and another first on CNBC interview. Coming up, defibrillators helping Medtronic profits keep pace. Chairman and CEO Art Collins will join us. We're just getting started on Squawk Box. Coming up next, the CEOs of Medtronic and Applied Materials, both first on the CNBC to talk profits. Plus,
let me move on to Medtronic, which we will talk to Art Collins a little bit later. MDT reported 54 cents. That was in line with expectations, and then sales were in line. We did see, and we'll ask Art Collins, we did see a benefit to Medtronic
from the Guidant
problem. Their highest market share ever for CRM, cardiac rhythm management. Pretty good number there. Also want to ask him about some of the subpoenas that all the defibrillator companies have received recently about how you market these things to physicians. Like if you use ours, you get this. If you use St. Jude's, maybe you get this.
He's listening right now. He's preparing his answer.
Yeah, maybe I won't say anything.
No.
I won't mention anything else that we might be asking. I have the really tough ones. I haven't even
They hardly ever answer the really tough ones anyway.
No.
So.
Well, we're going to talk about the stent, which just barely missed its...
You You're going to give him any more questions here, or are you done?
The one other thing I might ask him is whether all the people that need defibrillators have them at this point. Are you listening, Art? Because you take notes.
Coming up, a check on the European and oil market action. Plus, the old professor tells us how big oil countries are using their profits, what it means to your mortgage payments. Then trouble at Guidant, turning into good news at Medtronic. Can the medical device maker continue to take share? Chairman and CEO Art Collins joins us in just 10 minutes. Stay tuned. Double-digit growth in its cardiac device products, helping Medtronic to a 15% jump in its top line. Joe Kernan keeping pace with this story.
Yeah, thanks. The company reported results that were in line with expectations when you back out some items. 54 cents was right in line. Sales were, and it took me a while to figure this out, $10 million shy, and we're talking about almost $3 billion in revenues. If you have to look at a reason for why the stock traded slightly lower after the close, that's why. Joining us first on CNBC from Minneapolis is Art Collins, Chairman and CEO of Medtronic. And for disclosure, Art, did you hear the questions that I'm going to ask you, and have you already prepared them, or you weren't watching earlier?
Joe, I always turn you in early in the morning.
So you know what I'm going to ask you. Why don't you just go ahead then? No. You hit a 55% market share in defibrillators. I think that's, or CRM, that's the highest in history. Some of that had to be at Guidant's expense, right?
Well, you're right, Joe. We had a very strong quarter in our largest product line, implantable defibrillators. Revenues were up 34%. As you indicated, we did come through with about a 55% market share, which is the highest we've had. Now, while Guidant was out of the market for a short period of time during the quarter, and there was some benefit there, I think the major reason for the growth of the business, which doesn't affect market share, was the underlying growth in the market. But specifically for Medtronic, we have the strongest lineup of new products we've had in years. As I mentioned the last time I was on the show with you, we are investing in that business, both in terms of research and development and field force. So there were a number of different reasons that combined for a very strong showing.
Art, can you update us on, Medtronic, I'm told, has been the most forthcoming for this probe on how you market these defibrillators to physicians. Can you update us on what you think regulators are looking at, and whether, did your company do anything wrong in the way it markets these products to physicians in terms of kickbacks?
No, we've had in place for a long period of time a code of conduct and a set of business practices that we are very comfortable conform with the law. There was a subpoena that was received by Medtronic as well as St. Jude and Guidant from the U.S. attorney in Boston, asking for general information that had to do with interface with customers and compliance programs. We are complying with the request. We don't know what the basis of the subpoena was, and as far as we know, no lawsuits have been filed.
The stent business, drug-coated stent, is important to you. You'll be, I guess, probably third to market if you're able to do it in 2007. You recently presented data that failed to hit the primary endpoint, but most analysts and people that watch this closely say that's not the issue anymore. As science has moved forward, there's other issues, and it's probably comparable to both the J&J and the BSX product. Is that your company's feeling about the Endeavor?
I think that's a pretty good summary. The Endeavor drug-coated stent has been approved and is being sold in a number of European countries and other countries outside the United States. We did record almost $40 million of sales in its first quarter of release outside the U.S. That increased our vascular total revenues by about 12%, which is the highest increase we've had in a number of quarters. The big market is in the United States. We expect that we will enter that market in 2007. As you indicated, we think we'll be number 3. There has been recently a lot of discussion around not only clinical efficacy, but the safety profile of these products, and we feel we have an excellent safety profile.
And that's, I was wondering, you know, these other two are on the market. You've already got all this data. Just wonder, why can't, all the way to 2007, still going to take another year and a couple of months to get this in the United States. It's already sold in Europe. Why? Is the FDA overly cautious?
Well, we are using a rapamycin analog, and the FDA, because it is a new drug, wanted to see some additional information on safety profile, which, as I've said before, all the data that we see says it's a very safe product.
Where do we stand on reimbursement for the defibrillators for people that haven't necessarily, had a heart attack or had a sudden death incident? Where do we stand now? Are they reimbursing to the extent that you'd like them to, or do you still think a lot of people are not covered for this that need it?
Well, with respect to reimbursement, the products are reimbursed, but you're absolutely right, and you highlighted this on your lead-in, that many of the people that are indicated to receive an implantable defibrillator have not yet received them. In fact, we believe in the United States this market is only about 20% penetrated, which means that somewhere in the range of 80% of the individuals that are indicated have not yet received the device. But reimbursement right now is not the issue.
You got the stock looks great on that long-term chart. Do you feel that organic growth is going to be sufficient to continue that rise in the stock, or maybe would you ever buy St. Jude, for example, something like that? How's that sound? Would that be a fit? Would it make sense, or would smaller acquisitions be better for you?
Well, let me answer your first question, and then I'll get on to the question on St. Jude. Each year we go through a strategic plan looking out 5 years, and the last time we did that, we believe that if we execute correctly, we can hit our 15% growth target without any major acquisitions. And we're fortunate because we're positioned in a number of very attractive markets. With respect to acquiring St. Jude, we have such a high market share in cardiac rhythm, it would never pass the antitrust issue.
Just wonder what other areas might be attractive, because you've gone into pain management, you do things as far as the central nervous system and implantable devices for that. I'm just trying to figure out
diabetes.
Diabetes. Oh, you're looking at something in diabetes, or?
Well, we actually are the world leader in insulin pumps
because of that acquisition a couple years ago. Did you guys buy Minimed?
Right.
What was the name of that?
Minimed.
Minimed.
That's right.
Minimed. Right.
And we have a continuous glucose monitor that, when you link it with an external insulin pump, provides much better care and is another step toward an artificial pancreas.
We got to go. I appreciate your time. What's the temperature there today?
It's in the teens, Joe.
It's 30 back here. All right.
But it's clear.
But it's clear. Yeah, right. That's what they always say in Minnesota. All right. Thanks, our Chairman and CEO of Medtronic. It's near Fargo, Mark. You know that.
I know, yeah.
That's just west of there.
Coming up.
Medtronic in line with expectations, but sales slightly shy, and you can see that stock is called down a little bit. It's had a great run.